Yes, good morning, boys. क्या कर रहे थे? What we were doing? Special rates? Okay, great. We were discussing about special rates of your companies. Give me a quick revision of what we have discussed till yesterday's class. We completed the individual taxation, old regime and new regime, and then we moved on to the company model, where we told in company model you'll call it old regime and new regime. Old regime, as per Finance Act, basically says if you are a company, you'll split them into two categories. One is domestic, one is foreign company. Domestic company says if you want to tax at 25%, I require your turnover to be up to 400 crores in the tax year. Very good. 24, 25, which means I'm ignoring current year, I'm ignoring last year, I'm going 1 year before 24, 25. But if you don't satisfy the turnover, I'm going for 30%. And then we started discussing the new regime. The new regime basically now says section 200 and section 201. Section 200 says you will be taxable at a concessional rate, which is 25.168, which is nothing but 22 plus 10 plus 4%. And then we discussed 201 series, where I told you the generic rate has been confirmed as 17.16, which is 15 plus 10 plus 4, but only given if you are a manufacturing sector. Yes, that is what we discussed. I asked you to read it a little bit and come, because we're going to have a good discussion in today's class to understand a couple of things. Yes, first things, this is what the section says. The section starts with coming and saying, if you want to be taxable under this concessional rate, there are some rules that you have to follow. Rule number one, it has to be a domestic company. I am not giving this benefit to any kind of foreign companies. It is not for any foreign company, it is only for domestic companies. Second, it should be in the manufacture, or it should be in the production of what? Of an article or a thing. But I'm also giving this benefit to generation of electricity, because this has been a dispute in India for a very long time, whether generating electricity can tantamount to manufacture. In income tax, we have clarified it in every place. Every place where you see the word manufacture, you will also see it accompanying with electricity, which means income tax now clarifies electrical sector will always get this benefit, no doubts at all. Yes. Now, if you remember this from inter syllabus, you might have learned that electrical sector has an additional benefit at the rate of no. The electrical companies have a special benefit, that electrical companies are the only one which can claim depreciation on SLM logics. Yes, in the whole income tax, we only follow WDV logic. Depreciable at SLM is only for electrical sector. That's a benefit granted to you. Yes, next, it says you have to be registered after 1st October 2019. I told you the ordinance came around 1st October, 23rd August ke baad 1st October timeline was fixed off, and then it was manufactured until 31st March 2024, which is basically not even your tax year. It is your previous to previous tax year. Yes or no? Yes, your tax year is 26-27. They're not even counting 25-26, they're counting 23-24. They're counting 23-24, which means actually 3 years ago. Yes, that is the last time where they were allowing this benefit to you. Yes or no? Yes. Now, I'm assuming you've written this down, you've understood everything. I'm going to ask you some questions. Let's figure it from there. Yes. Question number one, I basically came and told you that you have special benefits coming for different taxations. Yes. So, I've come and told you, if you genuinely do manufacturing, I will tax at the rate of 15%. If you do any kind of special incomes like capital gains, winnings is lottery, unexplained income, all those things will be going at the special rates. I will not cover it here, but yes, one thing has been clarified. Even if it is special income, the surcharge rate remains the same. I will still go for 10%. That is not modifying. Just because I'm doing other incomes does not mean that income tax will say tax at the original 7 and 12. No, tax at 10 only is the mandate given to you here also. Yes, but here I am assuming you would have read this line. People, you might have seen the point number D. You might have seen point number D. What does it say? It says company should not be engaged in any business other than manufacture or production. By starting this company, I've been given a requirement. The requirement is this company should only do manufacturing and production. Any other activity will make this company violating the provisions. Yes, but if you notice, it says I can also do any research or distribution related thereto. Matlab, I am allowed to sell, but only as a manufacturer. Obviously, people, if I'm manufacturing, my job is to sell also. No, I cannot store it in my own warehouse, which means I am allowed to sell my manufactured goods, but any activity other than that will make me taxable. Any doubts on this? Yes. Now here is my question. People, Rahul had some shares. Rahul sold the shares. Rahul got capital gains. Apo Rahul is being taxed at the capital gains rate. Is it not violating the condition? Very good. That's the understanding here. Yes, a very subtle thing which you need to know is this is only a violation if it is into business activity, which means selling my shares as a non-business person will make me eligible for deduction. But if I start doing it as my core business, it makes me fully taxable. It makes me fully taxable. In similar lines, if I come and ask you a question, people imagine this company engages into intraday trading. You know what is intraday trading? Same day buy and sell, which is nothing but in income tax called as speculative business, which is called as speculative business. Now imagine if Rahul would have sold the shares after one day, it would have not been intraday. I would be taxable under capital gains, and therefore this condition is not violated. I'm still satisfying it. But imagine if I start doing intraday trading, it now becomes a speculative business. Will the condition still be available or will it be violated? It will get, very good, it will get violated at that stage, because at that point of time, now it has become a business activity. Now you may say, Rahul, intraday is not something I do regularly, but that will not matter, because in income tax, the moment you do intraday, it is deemed as speculative profits, and that gets taxable under PGBP, which means the moment that happens, this condition gets violated, you are no more eligible for deduction. Yes or no? Yes or no? Do you understand what I did? Yes, so be very careful on reading the words. I am only violating this condition when an alternate business takes place. If it is any ancillary incomes which is not part of the business activity, I will still satisfy the conditions. Correcta? Correcta? Yes or no? Yes or no? Next, people, it says I should not be engaged in any kind of business other than manufacturing operations. Matlab, as long as it is considered as manufacture, I will call it a eligible business. Yes, which is where some questions started coming up. Notice these items. Notice these items. People, item number 1 says development of computer software. Tell me, logically speaking, development of computer software is a manufacturing activity, non-manufacturing activity? It is technically not, because what are you doing? You're basically building a new source code. You're using some Java, Python script and all and making a new source code. Does it look like manufacturing to you? No. It's a funny thing, people, because in India that is considered manufacturing. Yes, over the years what has happened is a lot of people, when additional depreciation was a question, were approaching Supreme Court and were asking a question. Sir, you told me manufacturing, I just don't know what manufacturing means. At that stage, Supreme Court came and clarified, saying manufacture, according to me, is very simple. If you have a raw material and the final good and you compare both, they don't look the same. They don't look the same. When they don't look the same, I will consider it as manufacturing activity. And that's where some funny things started happening. Because see, people, there is no raw material when it comes to creating a software. It's basically my JavaScript. That JavaScript now becomes an application, technically looks different. And therefore in India, it was confirmed saying doing computer software is a manufacturing activity. And therefore you were eligible for deduction on additional depreciation. At that stage, when this law was being introduced, income tax became very wary of it. Because if they start giving approvals for computer software, in India, technically all businesses will take over 15%. Because India, 90% of the work happens in offshoring business. Infosys, TCS, everyone is doing software buildings. Every engineer will now start a unicorn and will come and say, let's do 15% tax. Did income tax want that? Specific exclusions given. Specific exclusions given. It now says these items will not be considered as manufacturing for this section. For this section. Matlab, Rahul, these items, if you go to additional depreciation, can you claim? Yes, you can claim deduction. There I will permit it to you, because this is an exclusion only under 201 series. Are we understanding this? Funny things will come from next. How is mining manufactured? Does mining look like manufacture to you? No. Supreme Court came and confirmed this is also manufactured. Because technically what happened? There is a big mine from which you took out raw materials. What you have in your hand is looking different from the cave itself. Sounds? That is what it is. Yes, income tax had to give a specific exclusion to say no, mining is also not considered as manufacturing. Yes, point number 3. This is where I felt funny. It says conversion of marble blocks into meaning. People, you have a factory. In the factory, you'll get this big marble block. What will you do? Big block came into small, small pieces. Each piece looks like a manufacturing activity. Because you cut, no. The moment you cut, what happened? Bigger block shows smaller block. They both look different in size. They both look different in size. People, you and I itself will agree it is not manufacturing. But when court says it is manufacturing, do you object? I don't know who filed a case and who won the case also. Yes or no? This was a case which was confirmed to be a manufacturing activity. Income tax said, no, not chalbe. Not allowed. I will not give this as manufacturing activity. The funny part starts somewhere here. It says bottling of gas into is a manufacturing activity. People, you are literally putting gas into a cylinder and now you are saying, no, gas looks different from cylinder itself. What is inside the cylinder? How is that manufacturing activity? Yes, apparently you're taking additional steps in process, no, because otherwise gas, yes, because gas will not fly away. We are making it into a conserved thing and therefore this is called a manufacturing activity. Yes, at this stage, I honestly ask the question. People, you have seen this big trucks and all, that CNG trucks and all. Yes, you will see compressed natural gas trucks, which means the moment my factory puts CNG into the truck, that is also manufacturing then. Technically speaking, because that is also bottling it, no, not cylinder, truck this time. So I'm saying bottling of gas into truck is also manufacturing activity. Apo if I am doing that activity, I can claim additional depreciation now. So that's what Supreme Court says. Yes, these are all items where income tax was very clear. They literally went into all Supreme Court judgments and they were like, where and all manufacturing was confirmed. They started listing out all the items and specifically excluded them from the purpose of deductions. Yes, funny thing starts from here. Huh? People are adding pipelines. Yes. So let me clarify this to you. Pipelines, if you know, there is a section called 35 AD, specified business. Specified business has a specific rule on it. It's a likey business from income tax perspective. If you're going to create these lay minors, which is transporting gas and all, that's itself called a manufacturing specified business. So therefore, to you can claim deduction to that extent. You don't need to worry about this section. Yes, very valid question. Anything else? No. Next one is what I love most, people. It says printing of books is called a manufacturing activity. Income tax says, boss, what you had originally was a soft copy. Now it becomes a hard copy. In that paper you have put extra print, no, looks different. Earlier it was white paper, now it is white plus black paper with some added colors. Yes, that itself looks like a manufacturing activity. Income tax confirmed, no, this is not a manufacturing activity. But why am I discussing all this with you people? It's not for this section. It's to confirm to you that if you see these kind of items for additional depreciation purposes, you are eligible. These items become eligible for additional depreciation at certain stage. You have to be careful on that level. Are we clear? Yes, this basically happened at CA Inter level. It was very unfortunate. In Jan 2026, CA Inter students will not know about these kind of things. You and I are discussing it for the first time right now. Jan 26, suddenly ICA asks the question to CA Inter students. First question compulsory 15 marks. The question heading starts by coming and saying, Mr. X is in the business of publishing materials. Is in the business of publishing materials, and then somewhere on the bottom it said they bought a new machinery in the current year. Now at inter level, you don't know, people. You will think publishing matlab normal activity. What you would have done? Claimed 15% depreciation. ICI suddenly started claiming 35% depreciation. 35 being 15 plus 20. Now at CA inter level, that was very unfair to happen because you don't even know about these kind of rules. Yes, honestly at CA final, you are also learning right now only. Yes, but these are the items which you have to just be a little careful. The idea is very simple. Supreme Court now comes and says, according to me, manufacture matlab, looking at the original product and looking at the revised product, the substance itself has changed. The way I'm interpreting both of them looks very different, and that itself becomes a manufacturing activity. So you don't need to really get into a new system altogether. Having very small things like taking a bigger slab and cutting to smaller pieces are itself a manufacturing activity as per Supreme Court judgments. Are we clear? Yes, not something which I agree to, but nevertheless, any other business notified by central government is also taken up. Right now, there is nothing notified, but yes, these are the items which will not be amounting to manufacture only for 201 series. Only for 201 series. The same things will become manufactured for some other sections. Any doubts on this part? Are we clear? Yes, good. Moving on forward, we are moving on to the next thing. It says STCG on transfer of capital asset on which no depreciation has been claimed. Give me an example. Very good. Land is a very beautiful example. If you're going to sell a land on a short-term basis, does it look like a business activity? No. At this stage, income tax says, my dear child, it is not a depreciable asset. Matlab, you would have not claimed depreciation on it in PGBP. And so to that extent, it assumes itself to not be a business activity. And to that extent, you will not be taxing it at the rate of 17%. I would like you to move to 22 plus 10 plus 4, which is nothing but 25.168. Yes or no? Anything else? Anything else? Think wide. Think wide. Don't just think about assets. Think something else. What and all can be short-term capital gains? What else can be short-term? Very good. Unlisted shares is a very good example. People, if it was listed shares, it would have gone to section 196. 196 sits on the top. I would have taxed at the rate of 20 plus 10 plus 4. But if it's unlisted, did you use it for business activity? No. In which case that will also sit here. When it sits here, you will tax it at the rate of 25.168. Any doubts on this part? Are we sure? Yes. Now I have a question. People, yesterday's class I was discussing this with you. Whenever you tax at 25.168, this section had a certain problem. It said you cannot claim your expenses and deduction. Apo, here is my question. I have sold what is called as my unlisted shares. Sold it for 1 crore. Cost of acquisition is 80 lakhs. Made a profit of 20 lakhs. Question, will you tax on 20 lakhs or will you tax on 1 crore? Why? But then we just discussed yesterday, no, you cannot claim any expenses or deduction. Okay, transfer expenses.
Section mentions gain only, so not income. Gain means it is net of.
Apni pata, income from house property also says income only, no? It says income here. Tell me, should you tax at 1 crore or should you tax at 20 lakhs? You should tax at a drafting issue from income tax perspective. I'm not sure if it is conscious enough or did they make a drafting error. But what happened is when income tax was clarifying the rules, income tax unfortunately only put the word of gross basis on the last item. When income tax was notifying the law, income tax said any income which is neither deriving nor incidental to the business activity will not get any expenses. Matlab, the part of telling that you cannot claim deduction was only given in this part. They did not mention it above. When they did not mention it above, I would say, sir, specific over general. This is an exclusion only on this item. It's not an exclusion given on the top. Apo, I can make a very valid assumption saying 25.168 short term pay you can claim expenses. But same 25.168 HP pay you cannot claim expenses. Ayana. Yes, I don't know if you know this verbatim, people. It's called exclusio, non-exclusio something. I don't remember it exactly, but it says an exclusion for one item does not automatically become an exclusion for others as well. Yes, this is a specific exclusion only on this part. It is not an exclusion on the above part. So I want you to understand, it's not that every 25.168 does not get expenses. It is only HP and IFOS. It is only HP and IFOS does not get expenses. Any doubts on this? Are we clear? I'm assuming you read it properly, people, because if you notice, on the top I have not given a star mark, but on the bottom you will see a star mark. On this bottom it says such other income. Which other income? HP and IFOS will not get any expenses, will be taxable on gross basis. So be very candid and clear on this part. Are we clear? Yes. Next comes this where it says any income which is treated as excessive by the assessing officer due to close connection of the company. If I have a close connection with another company and I make excessive profit, that profit will become taxable at 30%. Help me out as an example. I discussed this with you yesterday, where an example I came and told you is, imagine there is a company called Rahul Limited and there is another company called Rahul Junior Limited. Yes, Rahul is a normal company, whereas Rahul Junior is eligible for 201. People, which company is in trigger? Rahul Junior is on trigger. Yes, at this stage what has happened is Rahul will make a good at a cost of 100 rupees. Rahul will sell this good to another person for a cost of 105, which means Rahul booked a profit of 5. Tell me, do you have a problem here? No. Why? Because that's a normal company. I don't have a problem. 5 rupees profit is good enough to go. Now, this 105 was taken forward and sold for a price of 200 by making a profit of 95, which means right now income tax will say, my dear child, 95 rupees you're booking in Rahul Jr. Did Rahul Jr. really put so much efforts in this work? Tell me what are the activities which Rahul Jr. did. I said, sir, Rahul Jr. did nothing. He took all the goods from Rahul Limited's factory and went and sold it in the market, which means my activity was only as a distributor. People can distributor make 95 rupees margin? No. When the manufacturer itself is only making 5 rupees, where is distributor getting 95? At which stage what will income tax do? Income tax will go to the market and ask the same question. If you were just a distributor, how much margin would you make? How much margin would you make? You got to know that the person would only make 3 rupees ka margin, not more than that. That's the maximum margin that a person can make. Matlab, ideally speaking, Rahul Jr. should have only made a margin of 3 rupees. Would have only made a margin of 3 rupees. In which case, income tax will say, beta, up to 3 rupees you are reasonable. Up to 3 rupees you are reasonable. The balance 92 rupees becomes unreasonable profit. The balance 92 becomes unreasonable profit. Hi, Anna. Yes. Now I can do it in two manners, people. I want you to understand which one is correct. Manner number one, I would say the 92 is not a profit of Rahul Jr. Should ideally have been the profit of Rahul Limited, which means technically income tax will say the sale of 105 is wrong. You should have sold for 1 very good, 197. You should have sold for 197, which means two things can happen. Income tax will say, beta, the sale should have been 197 for Rahul Limited and the profit should have been 3 rupees for Rahul Jr. For Rahul Jr. In which case, income tax will say, you booked only 105, book another 92 rupees. Who should book 92? Rahul should book 92 and this guy will only book 3 rupees. This is option 1. Or option 2, income tax will say, no problem. Let Rahul go for 103. Let Rahul go for 105. In the books of Rahul Jr., I will say 3 rupees is normal profit, tax at 17%. 92 becomes unreasonable profit, tax at 30%. Tell me which option is better. Not from your perspective. From department perspective, which one seems sensible? Why? This one will also get taxed at 30 only, no? Both are in India only, people. How does it matter? Very good. That is a very valid reason. See, understand logically, Rahul Limited may have chosen 200 series. If Rahul chooses 200 series, what would have happened? This 92 rupees, Rahul would have taxed at 25.168. But now, because you have moved it to the other party, this guy is now going to tax it at 30%. Income tax made a profit of 5. Income tax made a profit of 5, which is where people, why I am telling you this is because when we go to transfer pricing, you will see the ulta will happen. In transfer pricing, it will not be option 2, it will be option 1. When you go to transfer pricing chapter along with me, we will discuss that the 100 rupees guy sitting in India. Which guy is sitting in India? The 100 rupees guy is sitting in India. When the 100 rupees guy is sitting in India, income tax will say, beta, you only booked 105 in India, whereas you should have booked 197. Matlab, I am losing 92 in India. I want you to book the income. I want you to book the income. And by that logic, transfer pricing will say option 1 is correct. But now section 201 is saying, no, let's go option 2. Because at the end of the day, both of them are in India only, no. Rahul is also in India, Rahul Jr. is also in India. How does it really matter? Therefore, in this chapter, it's an exception to the transfer pricing conditions. In transfer pricing, we will say, let's go option 1. But in 201 series, we'll say, let's go option 2. I hope you understand this part. Yes, we will discuss when we go to transfer pricing, people. Why are we not doing option 2? Because in option 2, that party is sitting outside India. And that party, when he's sitting outside India, he bought for what price? He bought for 105. He could have bought for 197. Matlab technically India made a profit. Hey, hello. Yes, he could have bought for 197. Matlab that country has made a profit. It's not India who's made a profit. That country has made a profit of 92. India says, why is that country looking at my profits? I want my profits in my country, and therefore it would come back to option 1 and not option 2. We discussed on the first day of the class, I told you, transfer pricing only triggers when India makes a benefit, which means the only way I could have got that money back is when option 1 was triggered and not option 2. I cannot look at the purchaser. I have to look at the seller because seller is sitting in India. Hey, hello. Yes or no? Yes, that is what the whole provisions are. Any doubts on this provision? Yes, my bigger concern is on this part. People, unlike for those who have handled transfer pricing, you will know in transfer pricing, the trigger area is when the transaction is between, better word, very good, A's, when the transaction is between A's, associated enterprises. There is a whole definition of associated enterprise. We had a section called 92. And 92 will come and clarify what and all in associated enterprise. Problem is, in this section, they do not use the same word. They use the word. And very unfortunately, this section is not even clarified what is close connection, which means income tax has no confirmation on what do you mean by a close connection. It can be anything. And when I say anything, I mean anything which department feels is right. Anything which department feels is right. There is no conditions attached to it. It can happen to a case where Rahul Limited lend the Rahul Junior Limited profit, let's say share capital is only 1% contribution. Does it look like a group company? But at that stage, I can come and say name is matching. No. Maybe name is matching for other reasons. Maybe directors are involved. Maybe some parties involved. Maybe I have a dependency on that company. Any reason can happen for them to call it a close connection. There is no clarification whatsoever. Matlab the powers are arbitrary here. Department has arbitrary powers to tax anything right now. The choice is theirs. The choice is yes. There is only one benefit which has been confirmed here, people. This transaction has not been allowed at assessing officer level. Because transfer pricing has get involved, you have to approach a TPO for this. You have to approach a TPO for this, and there is a mandate there. The mandate that a TPO can only start looking into these transactions when it qualifies as a specified domestic transaction, SDT. Now, I don't know how many of you have read about SDT, people, but SDT has a certain rule that you cannot trigger SDT until the transaction volume is more than, very good, then the transaction volume is more than 20 crores. Yes, so there is a requirement here, people. While it's not given here in this section, explicitly nothing is mentioned here. Section 92BA, the old section of SDT, comes and confirms saying I can only trigger this provision when you have a transaction volume of 20 crores, which means until 20 crores, this transaction is still safe. You don't have an authority to question me. Yes, when you do a transaction more than 20 crores, I will come and start questioning you. So yes, to that extent, I am a little safer. I am little safer. By the way, people, 20 crores is between two parties, between everyone. Transaction between Rahul to Rahul Junior Limited, Rahul Junior with everyone. It is always between two parties. Transfer pricing only applies between two close connections, and therefore between Rahul to Rahul Junior there should be 20 crores worth of transaction for something to trigger. Not a very small number. Definitely not a very small number. So you can be safe to that extent. Yes or no? Is there any doubts till this part? Are we clear enough on the provisions? Yes. From here we start reading a couple of other things. First line, it says a benefit granted to you is that if you are opting for the new tax regime, I don't have any more minimum expectations out of you, which means you will not be liable for MAT provisions, which is why first day of the class, third day of the class, we wrote golden rules. And I told you in golden rules, we always compare MAT with old tax regime, whichever is higher, and then compare with new tax regime, whichever is, that's a benefit granted to you. Yes. Now, point number 3 is a very, very critical amendment of current year, which you and I will not understand right now. So let's not worry about it. Let's figure it out at a later stage. Yes. But there is one small mistake from my side here. This was not 25. This was 26. Yes. I made a small mistake when I was bringing it out. It was 26. Anyway, when the books come in your hand, you can make the change once again. But yeah, again, I will clarify this when we go to MAT provisions. Right now, let's not worry about it. Not important at all. Yes. The next thing, small change. Again, this was supposed to be 201. Let's copy paste it. Clear? 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 Any doubts? Yes. So people, if you have understood it till here, I think we can prepare a good summary. The summary is that if you are going to prepare a 201 company, the tax rates will change based on your head of income. Will you have salaries? No, you'll have HP. HP will be taxable at 25.168 with expense, without expense. Without expense. Then I have PGBP, which will get split into two buckets. Reasonable profits, unreasonable profits. Reasonable profit to a 17.16, unreasonable profit to a 30 plus 4 plus, 30 plus 10 plus 4. I'm moving on to CG. CG में 198, 12.5 exceeding 1.25 lakhs plus 10 percentage plus 4 percentage, 197, 12.5 plus 10 percentage plus 4 percentage, 196, 20 plus 10 plus 4. STCG depreciable asset 17.16. STCG non depreciable asset 25.168 with or without expense. With the expenses. Then I move to IFOS, and IFOS says 25.168 is the answer. Any doubts in this part? Yes, that's a summary for you to take down, people. So I think we wrote section 201, we wrote it as domestic manufacturing company with a concessional rate of 15 plus 10 plus 7. However, we're going to write note the tax rates across all heads, the tax rates across all heads are as follows. The tax rates across all heads are as follows. We're going to prepare a small chart. Yes, left side says IFHP. Left side says IFHP. People, IFHP के नीचे we will write 20. Let's not write the effective one. We'll write surcharge and cess together. What is the original rate? 22 percentage. The original rate is 22 percentage. Yes, it's 22 plus 10 plus 4, which becomes 25.168. Yes or no? Yes, this is 22 percentage. Can I claim expenses? No expense. No expense. Correct? Yes, good. I am then on the next chart. The next chart is called PGBP. The next chart is called PGBP. PGBP will be split into two buckets. PGBP will be split into two buckets. One is called reasonable profits, and the next one is called excessive profit. Reasonable profit and excessive profit. A reasonable goes for 15 without surcharge cess. Yes, 15 percentage. Excessive profit goes 30 percentage. Goes 30 percentage. Yes, somewhere in the middle, I'm going to write CG. Somewhere in the middle, I'm going to write CG. Split into a complete bucket. I have 4 items. I have 4 items. First one is very good, section 198. Slowly start reading the section numbers, people. At least these ones are important. Yes, this is section 198, taxable at the rate of 12.5 percentage in excess of 1.25 lakhs. 12.5 percentage in excess of 1.25 lakhs. Then is section 197, which will tax at the rate of 12.5 percentage. Then we have section 196, which is 20 percentage. Yes, then we are clarifying this as short-term capital gains. But this short-term capital gains will again get split into two buckets. Very good. This is called depreciable and let's say others. Yes, why am I calling it others, people? Because technically here I'm not just talking about land, I'm also talking about investments and all. I'm also talking about investments and all. So I'm just putting it out as others. It just makes more sense that way. Yes, so that at least you don't get confused tomorrow. You don't start questioning saying, Rahul, what is STCG unlisted rate? It is 25. It is 25. Yes, depreciable goes for 15. Others go for 22. Others go for 22. And that leaves me with the last one, which is IFOS. That goes me to the last one, which is IFOS. I think IFOS goes for 22 percentage, no expenses. I'll do that. Right now, these are the two non-expensive. Are we clear? Are we clear? Yes, people, what you can do is from here to here, you can say allow expense. Just better presentations. Clear? Yes. At this stage, the only thing left is to say plus. Very good. Plus 10 percentage surcharge. Plus 4 percentage cess. That's the answer. That's the answer. Yes, that's all. Simple, straightforward. So, two regimes you have, people, section 201 and 200. This is the sections which you have. 201 series basically has these are the tax rates. You can write it in this manner. That is all you have to read for examination. Simple, straightforward. Clear? Is there any doubts on this part? Are we good to go? Yes, good. Let's move on to understand the other things. People, the first thing which you see on the screen, the question says you should have not used any plant and machinery which is previously used in India. Income tax made it very clear. I want a new domestic manufacturing company. Matlab all assets should be new to that extent, and therefore a condition which has come in to say do not use any second-hand machineries. Second-hand machineries. Two things to be kept in mind. One, income tax says I have a restriction only on plant and machinery, which means other assets can be second-hand. I don't have a problem. Yes, in the second-hand process also, it may happen that I may want to use some second-hand machineries, at which stage income tax says I'm fine up to 20% of the total value. People, 20% of total value on what date? Opening balance, closing balance, middle the year, any time during the year. And they gave it to us. That time, whatever is your balance today, that's 20%. How will you calculate? How will department know? Logically, people, in a computational model, I would only say 20% at the closing balance makes sense, because otherwise you're not going to report it to tax authorities. You're only going to report it when you calculate depreciation, and that only happens at the end of the year. So technically speaking, it is the closing balance. Ayana. Yes, but I want you to notice a certain difference. People have seen using the word what is called use. Uses this word called use. I'm going to show you a similar section. I want you to look at it and tell me whether you see a subtle difference here. Yes, this is your section 46, which was the old section 35 AD, talking about specified business. Yes, I'm going to read the lines. If you notice here, it says this section will have to fulfill some conditions. Condition number 1, it should not be set up by splitting up or reconstruction of existing business. Same as 201. Next, if it is not set up by the transfer of plant and machinery previously used for any other purpose to specified business. Same as that one. Yes, notice somewhere it will come and say in this section also you are permitted to do it until 20%. I am trying to find that part. Yes, see, It says any asset for which a deduction is claimed and allowed under section. कहाँ गया? We had a part here. Did they remove it from the new law? If any plant and machinery or its part previously used for any purpose is transferred to the specified business and the total value does not exceed 20% of the total value of the plant and machinery, then the conditions will be deemed to be satisfied. You see the conditions are the same. You see the conditions are the same, but I don't know if you notice this, people. I want you to notice this very, very carefully. Read the line very carefully. It is not set up by transfer of plant and machinery previously used in India. Apo tell me, people, there we wrote it should not be used. Did I use the word formed there? Check karo. Check karo. What did I use there? What did I use there? I said the company should not use any plant and machinery. Can you tell me the difference here? It's a very subtle word, but a very important difference. From next year onwards, you can use second-hand machineries. Very good. People, I want you to notice the difference between the word use and the difference between the word setup. Setup matlab when I'm creating the business, please do not start with old machineries to the extent of 20%. But here they do not use the word setup. Here they use the word use. Matlab here income tax is coming and telling, my dear child, you will have to satisfy this condition throughout your life. You will have to satisfy this condition throughout your life, because here they do not use the word setup. Here they use the word usage, and that's the important difference. Across income tax, wherever the section is there, this provision is technically there in 3-4 places. One is 10AA. 10AA, people. Says SEZ units. Then it is 35AD, specified business. All these kind of sections where you get huge benefits. Income tax is always this law introduced, where the law basically came and said you should never use machinery more than 20% in old values. But across income tax, they always use the word set up or formed. Section 201 is an exception. Section 201 does not use the word set up or formed, it uses the word usage. Matlab, I am basically asking you to satisfy this condition every single year. Yes, it's a very, very small difference, but a huge impact on this. Agreed, not agreed. And that's where the modification came in point number B. Notice point number B, it says business should not be. Here they've used the word formed or set up. Matlab, here I am only asking you to satisfy the condition in the first year. Apo second year, if you amalgamate, I am still eligible for the condition, provided you satisfy the 20%. Matlab, during amalgamation, if it happens that after amalgamation, you only got assets worth 19%. Amalgamation is approved in the second part and 19% gets approved in first part, I am satisfying the condition. Yes, but imagine if I am in 35AD, the section 46 which is called right now, there next year when I do amalgamation, even if I take over 50% of the assets, I will be eligible. Why? Because there it is set up on both the places. After the moment the business is ready, I can do it anytime. It doesn't matter. It doesn't matter. Yes or no? It's a very small difference for you to understand things carefully. This is where M&A comes into picture. Yes, you might have seen, people, there are special functions we have in tax called tax M&As. Yes, those are the tax M&As entities which will basically look into these kind of minute words and then will give suggestion to the client saying it's okay, you will still satisfy the condition. Yes, make sure that you start up right now as a new company. Next year you do whatever nonsense you want, it is eligible. We will be completely fine with it because income tax was cautious enough. They used the word formed. Mistake from. This is called reading between the laws. Any doubts on this part? What about? It is not part of your asset block, so therefore it is not added to your 20% block. Any assets taken on lease is fully allowed, no problems at all, completely fine. Yes, yes, any doubts on this? Are we sure? Yes, read it carefully. It now says company should not use any plant and machinery previously used except for 20%, which is perfectly fine. And if you're buying assets from outside India, it is deemed as new. It is deemed as new. I am eligible for the full conditions of. Yes, point number 2 came and said you should not be formed by splitting up or reconstruction of an existing business. And here I want you to notice, people, it says what should not be formed? Business should not be formed. And this is the most important thing. People, imagine a very simple example. Imagine Rahul, imagine Tata opens up a new company And in Tata, the new company starts by doing, let's say, steel. Yes, Tata Steel has been started. Today, the company has started Tata Steel. Next year, the company plans to open up a new business line. Business line, for example, let's say Tata FMCG. They're going to now start manufacturing biscuits. Now, what happened in year number 1? They started as Tata Steel. All new assets, no problem at all. Deduction was eligible. Next year, they opened up a biscuit manufacturing. And for that biscuit manufacturing, they did not start new. They took over someone else's business. They took over someone else's business. Tell me, is the condition violated or am I still eligible? Why? Very good. A very, very small word for you to notice, people. The wording is not company, the wording is business. Company formed by splitting up or reconstruction. Matlab, during incorporation, you should be new. But when they use the word business, it means every business line should not be formed by splitting up or reconstruction. Apo in the future, if I start a new business line by taking over someone's assets, income tax will say this is a violation of condition. This is a violation of condition. In a very rude sense, people, under income tax, business is as good as undertaking. You know what is undertaking? You learned it in accounts. It's called in accounts, it's called segment. You have something called segmental reportings. You prepare segments, which means every business line is shown as a different segment, which means for that segment, I should have not done any splitting up or reconstruction. If for that segment I did splitting up or reconstruction, company becomes violating conditions. Yes or no? At that stage, people, here is a question. People, now in the year 2, I took biscuits, no. Biscuits was splitting up or reconstruction. Apo, will biscuits part of the business not be eligible or company itself become ineligible? The whole company itself will become ineligible, because for your company itself to be eligible, it says you have to satisfy these conditions, which means that business will now impact the whole company, because it's not possible. You think in my company, what can I do? In my company, one business line I will go 17%, one business line I will go 25%. Will it be possible? People, when you file the form for claiming this special section, you file it for a business or for the whole company? When you file it for the whole company, one condition being dissatisfied, whole company becomes ineligible. Ayana. Yes, which means you're looking at splitting up on a business level, but conditions are on a company level. Small difference for you to keep in mind. Any doubts on this part? Are we clear? Sure about this? Yes, good. Reading on forward, it says a company should not use any building which was previously used as a hotel or a convention center on which deduction under section 80 ID was claimed under income tax 1961. Did anyone do a research on what is this 80 ID?
Get to pay deduction for 5 years
Of
hotels and
5 years of what? What are you claiming deduction? Why would you claim expenses as deduction?
I mean, deep into it. I just want to know what the section is.
People, back in those days, back in the past days, we had some huge sections in income tax. There was a complete 80 series. There was 80 IA, IB, IC. I don't know if you've heard, right now we have a startup deduction. Do you know about this? Income tax gives a special startup deduction, section 80 IAB, which comes and says if you incorporate yourself as a startup for the first 10 years, 100% of the profit is allowed as deduction. Yes, similar to that, in income tax, we had huge deductions. We had 80 IA, IB, IC, ID, IE, so many other deductions were there, where basically income tax used to come and say, if you enter into this sector for the first 10 years, 5 years, 15 years, 20 years, depending on the need of the business, I will fully exempt your profits. Fully exempt your profits. At that point of time, there was a section called 80 ID, which said in India, if you start a hotel or a convention center, then whatever profits you make, the first 5 years, 100% allowed as reduction. 100% allowed as reduction. After 2017-18, Modi Sarkar brought in a sunset clause. They literally went to all these sections and they came and said, you know what, let's delete it off. Let's delete it off. So today they have no validity. They have no validity. Right now you can create a hotel, you will not get any deduction except for the 35AD. Specified business. Yes, before specified business was into picture, 80 ID was what people were claiming. Now when specified business is into picture, people claim specified business as a deduction. Yes, which is why if you notice, I've still quoted 1961. Why? Because the section does not even is not alive right now. When the section itself is not alive, income tax never bothered enough to create a new section for it. They said, you know what, let's refer the old section itself. Yes. So here is income tax coming and telling a building on which you have claimed 100% reduction in the past years. I'm sorry, don't use those kind of buildings for my purposes. Although if you honestly come and ask me, I don't know how this works. People, what building are we talking about? Hotel or convention? What the hell are you going to do with these two? Manufacturing le hotel कहना संबंध हो? What are you doing hotels for in a manufacturing business? Giving rent, IFHP, food manufacturing le hotel. You're manufacturing food or you're inviting guests? I don't understand. What are you doing? Huh? What is raw material finished goods? No, what is your business? I didn't understand this. Sorry. You're manufacturing food, okay, in a hotel. Oh, you're cooking food. Acha, okay, you're the chef basically. What is your primary business? To cook food, huh? In a hotel, what is your primary business? To give customers convenience, or are you looking at food as the primary activity? Dude, you don't satisfy this condition, you'll violate this condition, no? Correct, Badri. My question is, you may satisfy that condition. Did you satisfy point number D? Are you in the business of manufacturing? You're in the business of providing comfort to your customers. You're a resort, no? You're a resort or a hotel. What is your primary business? To provide service. Are you into manufacturing? Did you satisfy this condition? You may have satisfied that condition. What about this condition then? Nevertheless, it was violated. Yes, do you see any? I don't, at least people, maybe my limited knowledge does not tell me that this is a valid condition, but I don't know how I'm going to use this provision at the end of the day. Doesn't make any sense at this point of time. Yes or no?
Yes.
Guest house for employees, huh? Hotel. Don't you call it, what do you call it? Staff quarters. How is that a hotel? It's an RFA, right? People, last I checked in salaries, you have two things. One is RFA, one is hotel accommodation. The moment you take a hotel, it is no more an RFA, it goes into hotel accommodation.
It was previously used as a hotel.
It's a building which was previously used as a hotel, now it has become a staff quarters. That would be fun, no? A hotel converted to staff quarters, is it? Sounds like a haunted house. I don't know, I would not do that, honestly. I've never seen a person converting a hotel into a house. Logically speaking. Anyway, people, I don't see the validity of this lines, but honestly speaking, 201 has been very poorly drafted. There are two more places where this invalidity will come. We'll discuss about that as well. Yes, nevertheless.
Keeping the manufacturing part aside for that point, like they would have claimed reduction only for 5 years.
Yes.
So we got that part that was deleted after 2017. Then why does it make sense?
No, so they're not talking about the deduction. So your question is that because the deduction was only for 5 years, today it's deleted. Why does it make sense? It's because in that 5 years, you would have used the hotel, right? So on that hotel, you would have technically claimed 100% profit deduction. So they're not bothered about the business. They're bothered about the building. You should have not used the building which was used during that deduction phase. Which means if you have a building you have bought after the deduction phase, I'm still fine. But if you have that building from the deduction phase, what would have happened? You would have claimed 100% of it as deduction already. If you're again trying to bring it here, what will you try to do? Claim depreciation once again. Will I give that to you? That's the logic. Nothing else. Clear? Yes. Point number D has already been discussed, so nothing about it. Point number E is what we have to discuss later on. What are the deductions and benefits which have been taken away from you when you claim new tax regime? Anything on the top of your head? Additional depreciation is denied. Very good. What else? Like chapter 8 deductions have been denied. We discussed that day except for 3-4 items. 35 and all will not get denied, but definitely denied only. You remember some things? Deductions which are not eligible if you choose the new tax regimes. HPA. That is not given in the separate part. That is already given in the list itself. What are the items which are denied to you as a deduction? People, a simple logic I will tell you. A simple logic is very thin. Income tax basically comes and says, if it is a huge deduction, don't allow. If it is a Huge deduction, don't allow. Or if it is a very regular deduction, don't allow. That is what the logic is. Yes, income tax goes with that logic. So by definition, additional depreciation became a huge deduction for year 1. Income tax said, don't allow. Then we have 3580. 100% of your capital expenditure allowed in current year itself. Income tax said, don't allow. Chapter 8, regular deduction. Every year I am claiming. Income tax said, don't allow. Yes, and that's what the conditions are coming into. So income tax has a list of items where income tax said, these are some huge deductions you're trying to claim. I would say, don't allow. I would say don't allow. Increase your income base. Automatically tax rate will be lower so that you can decide for yourself. Yes. Now all these things I can put it in this section. I have it in the next page. These are all the deductions which are not eligible. But honestly, you and me, not relevant to read right now. Because head parchadana puriyum. Only when you have read the head with me will you understand. So what I'll do is I will leave everything right now. As we keep going to the respective heads, when we talk about that thing, I'll parallelly come and say, don't allow this deduction under new tax regime. Yes, it just becomes more convenient. Otherwise, right now, I'm honestly thinking you won't understand it. Yes, if I read it just on the top of my head, it says additional depreciation not allowed. Tea, coffee, rubber development account. You know what that is? You know what that is? No. You have something called site restoration funds. No clue. You have something called scientific research. You know scientific research? Yes. In scientific research, there are two things. One is in-house research. One is donations made. Income tax will say in-house allowed, donations not allowed. Then we have something called approved in-house research, contribution made for scientific, social, statistical research, donations. Then we have something called investment linked allowance for specified business. What is that? That is only 3580. That is the part which is called 3580. Income tax calls it specified business. That is what the logic is. Then we have something called agricultural extension project, skill development project. And then we have the whole chapter 8 deductions, which is not eligible except for 2 items. Deduction for new employees, which is nothing but 80 double J double A, now clarified as 146. And then we have intercorporate dividends, which was 80M, now becoming 148. Now becoming 148. These are the deductions which are not permitted. Again, let's keep it for that chapters. Let's not worry about it right now. It's not important at all. Any doubts on this? Are we clear? Yes, good. That leaves me with the last 2 things, people. Last item says where the condition gets violated. Where the conditions get violated. You have so many conditions given. Imagine Rahul violates a condition. What is the problem? Income tax will say, my dear child, you violated the condition. Inimala 201 not allowed. Inimala 201 not allowed. Here is my question. People 201 got denied to me. Will I have to go back to the 25 or 30? Or can I move to 200 series? I can move back to 200 because 200 series had any conditions. No, it never had any conditions. So what can I do? I can say let's move back to 200 series. Let's claim 25.168 at least to start with. Yes, unfortunately in 2019 when this law was passed, that was not there. And therefore in 2020 one big issue happened. Assessing officers literally at a point of time came and said, if you violate this condition, even 200 will not be allowed. Which means a person directly has to go to 30%. It was in 2020 that income tax clarified once again. If you violate 201, I will still let you go back to 200. I don't have a problem. I don't have a problem. But the most critical thing in this chapter is that income tax says, my dear child, this is new tax regime. You have to choose it. I will not give it automatically. Matlab, old tax regime is your primary regime. You have to pay tax at 30 only. If you want, you can come to this section. But I have a very solid condition. If you enter into this section, I will never allow you to go back to the old sections. I will never allow you to go back to the old sections. Once you come to 201, you cannot decide to move to 200 or normal. That choice is with me only. Only an assessing officer has the power to move you back to old regimes. You don't have the power yourself. That is not permitted at all. That is a condition given in both 200 and in 201. Which means income tax says if you choose 200, you will stay in 200 only. Moving you back to the old regime is a my choice. That's not a choice you can make. And if you are in 201, if you violate the condition, department will move you to 200. If you violate that also, department will move you to normal. You cannot make that choice. At some stage, you are like, you know what, sir, I don't want transfer pricing to apply anymore. I don't want to pay tax at 30%. I want my expenses on HP and IFOS. Let me move to 200 series. Not allowed. Not allowed. The moment you chose 201, you have to stick to 201 only. Only department can shift you back. Are we clear? Yes. And here came the biggest problem. The biggest problem in this section comes and says, if you want to claim 201 series, which series? If you want to claim 201 series, you need to file a form. You need to file a form. Check and tell me, when do they want you to file the form? In the meaning, the first ITR which you file, I want you to choose for this regime. Matlab, I have to choose it in the first year itself. If you don't choose it in the first year, you can never claim this regime. You then have to choose only 200 series. You have to choose only 200 series, which is where my question came up. People, for those who remember, this section basically comes and says, the moment you choose new regime, MAT is not eligible. Now understand this carefully. Rahul has incorporated himself in 2020. Rahul in the first year itself chose new regime. Tell me, was I ever eligible for MAT? Was I ever eligible for MAT? If I never had a MAT, will I ever have MAT credit? Is there any question of setting of MAT credit? What is this line for? The line says, any unutilized MAT credit up to 31st March 26 can be set off against 201. Where did you get this number from? Did your company ever have MAT credit? Where did this question come from? I understand a 200 company, because a 200 company may have been an old regime, would have shifted to new regime, may have MAT credits, now Uttagram. Where is this coming from? Does this line have any validity? You have introduced as an amendment where it's an amendment of current year to come and clarify you can now claim MAT credit under new tax regime. But question number one, where is the MAT credit? Did you ever have MAT credit? People, if you would have permitted me to claim MAT in the first 2 years, and then I could have chosen this regime, I agree. When from the first return itself I have to go to this regime, where on earth did I have MAT? When I never had MAT, where is the credit coming from? What am I supposed to set off? Correcta, not correcta? Yes. Apo summa you start introducing useless things and then you expect us to understand things. Clearly, drafting errors. Clearly drafting errors. I'll tell you why this drafting error came. They brought this provision in 200 also. What did we do? Control C, Control V. You brought it in 200 series, you automatically did Control C, Control V, brought it everywhere saying, new tax regime, this is the rule. Hello, at least read the law, no. Correct, not correct? Yes, useless drafting error. This has no validity at any point of time, does not make sense at all. If you honestly come and ask me, I would say scrap. It might be an amendment, but good news for you, you don't have to read it. Correct, not correct? Yes, but yes, the one and the most critical amendment I want you to realize right now is, people, you might have heard this earlier and I'm telling you this once again. As you were in the old income tax, 115 BAA, BAB, BAC, BAD, BAE, you had to choose by filing a form. You had forms 10. EA was for 115 BAC. IC for 115 BAA, ID for BAB. Yes, income taxes scrapped all the forms. Income tax has scrapped all the forms. Now, if you notice, the amendment comes and says the option should be exercised in the first of the returns of the company. Earlier, this would say the exercise has to be the option has to be exercised by filing a form 10ID, by filing a form in 10ID along with the return. Now, this some can says you have to choose it in the return itself. Matlab, the moment you file your return, they will come and ask you, beta, do you want the regime? If you say yes, they will give you the regime. If you say no, they will move you out of the regime. That's what the law is. You do not have to file a form anymore. This form has been scrapped off. Yes. Now, this may sound like a good news. Actually, this has started causing problems. I don't know if you realize this. Earlier, what did it ask? It asked you to file a form. Yes. Now, think very logically. Rahul is an old regime. Wants to choose 200 series. What series? 200 series, matlab. New regime 115 BAA. I have a permission. Earlier, I could file a form and then file my return. Yes. Apo imagine, people, current year, it has so happened that I may have delayed my filing of return. The return would have been delayed. For some reason, I'm not able to file the return on time. 31st October, due date is going to go over. Last time, what I could do? I could file a form on 31st October saying I would choose new regime. And then I can file a return in at November also. And I will still be eligible for new regime. Now, what does the section say? You have to choose this option on the return time itself. Matlab on 31st October, if I don't file the return, can you exercise this option? You will automatically shift to old regime. Yes or no? Yes. Now, why am I telling you this, people? This happened in ICA. ICA 3 years ago, a beautiful question ICA prepared. The question basically came and said that a person has so much income data. One line comes and says the return of this person was filed on 30th November. Compute the total income. Compute the total income. Now, people, when the question says compute total income, I did not confirm regime. What is your assumption? Choose both, whichever is better. Choose both, whichever is better. Beautiful, no? MCQ question. 2 marks. Option A says old regime. Option B says new regime. If you choose option A, better, because higher losses. There was a question on losses. Yes, on that question of losses, it basically said if you choose old regime, the loss will be 5 lakhs. If you choose new regime, the loss will be 1 lakh. What will you choose? What will you choose? Old regime? Why will you choose old regime? Because higher loss. Answer was new regime, because you never filed the return on time. When you don't file the return on time, can you sorry, Ulta Sultan. Sorry, option A was new regime with 1 lakh and option B was old regime with 5 lakhs. You had to choose old regime with 1 lakh. You have to choose old regime with 1 lakh because at the end of the day, you never filed your return on time. Back in those days, I could have objected. I could have come and said, sir, I may have delayed my return. Where is the question talking about the form? It may have been possible that I could have filed the form on time. But ICA at that point of time itself made an assumption that when a person does not file his return on time, what on earth will he file the form on time for? And therefore, there ICA made an assumption saying a person will only choose old regime. Now it is very clear. Matlab from this year, ICA does not have to clarify it also. ICA will simply come and say beta has filed the return late. Matlab answer is old regime. Answer is old regime. You cannot shift to new regime at all. Yes. And by the way, this is exactly ulta for individuals. Think. In individuals, you start with DTR. If you want ATR, you have to file a return. Yes. Apo, if you get a question in exam, imagine if I give you a question, the question comes and says an individual has filed his return on 31st August, non-business case. 31st August, non-business case. On time, delayed file. Because, yes, on 31st August, if the person files a return non-business case and the question says compute tax, answer is DTR. Answer is DTR. Answer is not ATR because you have lapsed your options. This is a very, very subtle amendment, but a huge impact from an exam perspective. Be very, very careful on this. A belated return will cause problems. A belated return in company model will ask you to go to old regime. And a belated return in individual model will ask you to go to new regime. Yes, I've written it down here somewhere. See if you match it off. I am at 115 BAC. Notice this part. People, which regime should you choose is the question. Yes, first line it says wishes to pay tax as per 202. 202 is 115 BAC replica. Yes, question says I wanted to pay tax as per 202. Matlab DTR. Next line says wishes to opt out of DTR. ATR. Wishes to pay taxes per regular provisions. ATR. Defaulted in filing returns of income within due date. For an individual, it is DTR. For a company, it is old tax regime. Ayana. Yes, very, very careful. Think, people. This is your LDR. Something for you to keep in mind on your last day revisions. Yes, be very, very careful on this on the last day revisions. You are filing a return late, I'm going to cause you problems. Yes, I think I'm at page number 23. I will make you mark all this once again once I give you the books, people. Don't worry about it, but right now I'm just noting it down. Meaning 201? Is this the first return or the subsequent returns? If it's subsequent, I don't care. No, in the first return, if I've already chosen new regime, you're always only going to be in new regime only. If it's first return, you could have chosen 201, which means now next year you'll have to choose 200. In the first return, if you did not choose 201, you have not chosen 201. You have not filed the return on time, so 200 also is not allowed. Matlab, you'll have to go old regime. Next year, what will I do? File the return on time, apply for 200. Understood? 200, because 200 is for any company, right? So 200 can be chosen any year. But whichever year you're choosing, please make sure to file the return on before the due dates. Sorry? No, that's what I said. No, see, if you have opted in once, it is always going to be there. So, okay, if you have understood it wrongly, let me explain this once again. People first return, Rahul chose 201. Rahul has moved to new regime. Next year, even if I file my return late, I cannot move back. Because once I have chosen, it is always there. Only the officer can change your position. Matlab, from my perspective, next year, even if I file my return late, I will still be in new regime only. This whole question is being discussed only when you're transiting. When you want to transit. Yes, you'll be taxed at 201 rates only. It doesn't matter. Yes, it's only the first time when I want to transit. When I want to move from old to new, I have to file my return on time. If you're already new, it doesn't matter anyways. You don't have a problem at all. The problem will come in individual model. Because in individual, you'll start with new only. If you want old, you have to file the return on. That's what the logic is. Any doubts on this? Yes, very valid question. You file a return. In the first return, if you have chosen new regime, in the revised return, you cannot choose old regime. The moment you have chosen a regime, it always becomes mandatory for you. It's also the same way, people. If in the original return I filed old, and in the revised return I'm choosing new, will they give it to me? Why?
Because that is what pattern they have mentioned. It is to be filed.
Very good. Because it says in that amendment that you have to file for this before the due date of filing return. Apo in the revised return, you don't have the due date. The due date has crossed. I will not be permitting it to you. Yes. And in original return, if I have anyway chosen new, you can never come back to old. So you're already screwed there. Yes. So by that stage, the moment in the original return you chose new, income tax assumed that going forward you're always going to be in new only, which means no choice. But the point is either one of the two will never apply. Clear? Any doubts on this? Yes. Individual has filed something on 15 July. Which regime? DTR. He wants to revise before 31st March. 31st July. Crazy guy. I will permit it to you, but yeah, again, doesn't make sense. Clear? Yes. Last two people, it says wishes to not opt out of DTR. Double knots. Not opt out. Matlab double knots, and therefore the answer is DTR. And the last one says wishes to avail maximum benefits under the law. Check both the regimes, but here is where you have to be careful. In that question, they said compute the tax whichever is beneficial to the assessee, but the return is filed late. Matlab answer is default only. Yes, that has a preceding factor over the bottom because you cannot avail the maximum benefits when you have never even filed the return on time, and that's what the logic came back to you. Any doubts on this part? Are we clear? Yes, this is what it came back to you, people. I think this is what the section talks about. There is one last few things which we have to discuss. The first one I've already spoken about. I've told you that when you have a close connection with another person, please make sure that your profits are reasonable enough. Any excessive profits will become taxable at the rate of 30%. But like I told, there is an exception. The exception says if the transaction value exceeds 20 crores, I'm going to apply SDT rules. I'm going to apply SDT rules, which means that assessing officer has no authority. The authority is with transfer pricing officer. Yes, we'll discuss it when we go to international taxation. Not important right now. Clear? Yes, that leaves me with the last two. It says company can opt for this option only in the first of the returns. Notice 200 mein it says the company can opt for this in the return of income. It wants to opt. In the return of income, it wants to opt, but it has to be done on or before the due date of return filing for that tax year. For that tax year. For that tax year. And then comes the last one, which comes and says once the company exercises the option, it can never opt out. It can never opt out. But yes, an assessing officer has the authority to move you back to 200 series when you violate any conditions. When you violate any conditions, matlab all powers are with officer. No powers are with you. No powers are with you. Are we clear on this part? Yes or no? Yes or no? Yes. By the way, people, I'm not sure if you know this. In individual model, you have an option to opt out. Yes. For a company, once you opt, you can never opt out. But in an individual model, if you have chosen ATR, you can again come back to DTR once. Matlab, income taxes, you will start with DTR. You can choose to come back to ATR. And then if you feel regretful, I will let you come back to. But the moment you have now come back to DTR, you can never go back to ATR. You can never go back to ATR. Matlab, basically, income tax intention is the final regime should be new. The final regime should be new. Whether you look at company model or you look at individual model, the final regime should be new. Never go back to old. That's what the logic is. That's what the logic is. Any doubts on this part? Are we clear? Yes. If you have understood this, I'm going to show you some questions. Let's see if you're able to answer it. Don't worry, people. These questions are not important. These are my self-made questions, only for understanding purposes. Yes. I am not going to discuss with you all the questions which ICA has given, because these questions are linked to your heads of income. You'll only understand when I complete the heads of income. So I will keep this on hold. We will remember it that we will do it after the PGBP and all gets over. Yes, the questions which I and you have to discuss are sitting up here. My author based questions, English. These are my author based questions. I'll give you a minute. Read the question. What's your primary conclusion? I think there are two questions. Part 1, part 2. Primary conclusion, part 1. Who's correct? A was correct? Sure? Nope.
Within the 20%.
I think you're not giving me, you're kind of correct, you're just not correct. Think very logically. I don't know if you're reading the question properly. No, it's incorporated on time only, no problem. It's in 2023, no? That's before 24, that's fine. I think if you look at it carefully, you will realize the first subdivision itself does not have one question, it has two questions. No? Chalo, let's see if you can read it along with me. The question says, I have Jerry Limited domestic company incorporated on 2023, which is fine for me because I'm within the time limit. Is engaged in the business of manufacture of cheese. Good enough. Manufacturing is covered. Yes. The company has purchased new machinery for a value of 45 crores, which are all put to use before 2027. 45 crores worth of new machinery. Eligible condition. Jerry Limited also entered into an agreement with Nibbles Limited, another domestic company, to purchase all their machinery in cheese production for a total value of 15 crores. Now I've bought second-hand machinery. Yes, which means now Rahul has, Jerry has 15 crores worth of second-hand machinery. And I need to check 20% of what? Of total. Total matlab 15 divided by 15 plus 45, which is becoming 25%. Unfortunately, conditions have been violated. Now I want you to read it further. It says the net profit of the company is 36 lakhs. Does it matter? No. Jerry Limited opted for the concessional regime and is wanting to pay tax at 17.16. However, the assessing officer now passes an order contending that Jerry Limited has violated the conditions and therefore has computed tax at 30% plus a cess of 4% as per normal provisions. Till this stage, I am assuming you told the person is correct. Assessing officer is correct. There are some mistakes which the assessing officer did. Read the next line. The next line says the assessing officer also mentions that Jerry Limited will not be eligible to opt into any concessional tax regimes and will always have to pay tax in the normal case. Is he correct here? What did I tell you? The moment he violates 201, officer can opt for 200, which means to this extent also he is wrong. But the section comes and says from 201 he moves to 200 only, because 200 is an eligible thing. You have to give assessee that option. You can ask the employee, you can ask the assessee, and if the assessee says I want 200, you have to grant him 200. Yes. Even if assuming the current year 30 has not been opted for, no problem. Assuming current year officer said 30, imagine if I agree to this also. How can you object me for the next year? For the next year, I have a choice. Next year, when I file my return, if I choose 200 series, can you object to me? Matlab, this line is definitely wrong. The part where assessing officer says he will not let me choose 200 also is a violation, because the section very clearly says I can either move from 201 to 200. So to this extent, assessing officer is wrong. Yes or no? Yes. So your answer should be that the assessing officer is partially correct in this. Partially correct to deny you 201. Wrong enough to deny you 200 also. Yes or no? Yes. It's all about reading the question properly. Did you understand? Are you sure? What happens to the alternate? In the alternate, is assessing officer correct? Why? Because, very good, any imported machinery will be assumed as new machinery, and therefore assuming 0 to 60, matlab all machineries are new, and therefore conditions have been satisfied. Assessing officer cannot object to this. Are you sure? How does that matter? He has already opted 201 in the first return. Officer is denying it right now because he bought new machineries right now. No, the machinery from Nibbles has come this year. I told you, no, you don't check for the machinery in the first year, you check it. People, from the 20% logic, you're right. From the 20% logic, you're right. What if I tell you this is splitting up or reconstruction? It's a group company, right? It's not? Okay, but where does it say that splitting up or reconstruction has to happen with a group company? What does it say? It should not be formed by splitting up or reconstruction of existing business. Yes or no? Yes or no? Tell me, have I violated that condition? Very good. Very good. That was the answer I was looking for. People, this was not a violation there also, because assets have been bought in the current year. Business is already set up. There is no formation happening here. And so to that extent, yes, it is a new machinery, but at the same time, it is not formed by splitting up or reconstruction, and therefore I am eligible for my deduction. Assessing officer cannot question it. Cannot question it. You understood what I did? Yes, people, when I am preparing questions, it's not going to be easy, don't worry. Yes, these are all my set of questions. Obviously, I'm going to complicate too many things. Any doubts on this part? Yes.
The company violates the points, the conditions. You have mentioned that the violation is of condition C to E, then the company can choose for 200. But this is violation of condition A itself.
One second, I may have mistake on the right. What have I written? A, okay, it's not C to E, it is A to D. Yeah, okay, I might have realigned this, people. I'm so sorry. I think there was an amendment current year, so I might have realigned this. This is A to D, A to B. Let's see, A to D. Basically, you are okay with not violating E. Yes, if you violate E also, I still don't have a problem, because E is technically moving you to 200 series, so that's fine. It's A to D. Yes, thank you for that. Correct. So any violations of A to D will cause a problem. E is okay. E is not a problem, because E is technically a deduction which is not eligible under both the regimes. And so that violation will not cause much of a trouble. You cannot move me because of that reason. Yeah. Yes. Sorry. One more. People, this is a question for you to practice. Let's see if you get this question right. I am at question number 2 is something which we'll discuss later on. This is question number 3. This question will test you on your 201 series, all tax rates. Yes, people, I'll read the question. You help me with the answers. I'll note it down on the right side. Yes, question says, I have Santa Limited, incorporated in 25th October 2023. 201 series is a wholly owned subsidiary of Banta Limited and is engaged in the business of manufacturing of automobile. Am I satisfying my conditions? Very good. It furnishes you the following information. It says the net profit of the manufacturing business is 26 lakhs. Tax rate 15 plus 10 plus 4. Yes, right now I'm going to call it 15. No problems. Read further. It says included in the above net profit. Matlab 26 has this number. Included in the above net profit is a sale of 500 engines to Happy Limited, another wholly owned subsidiary. Matlab this is my fellow subsidiary. This is my fellow subsidiary at a price of 30,000 rupees, whereas the normal selling price would have only been 28,000. I could have sold for 28,000, but I'm purposely selling for, because I wanted to make unreasonable profit of per totally 500 engines. Number becomes something about 26 is wrong. Something about 26 is wrong. I would say now 26 has to be split. 26 goes from 16 lakhs to be taxable at 15% and 10 lakhs to be taxed at 30%. Hey, hello. Correct. Come on. It says during the current year, Santa has received the following assets from Banta Limited. People, I am not supposed to receive assets. Am I supposed to receive assets? Except for plant and machinery. I can receive assets except for plant and machinery. So let's look at the assets and see if we are violating the conditions. Yes. First, I received units of equity oriented mutual funds. Any violation? No. This asset was purchased by Banta Limited in 24-25. Which year am I? 26-27. People, this asset was purchased about 2 years ago. Anyone knows equity oriented mutual funds are technically listed securities? Section 190? 190? Very good. This will go to section 112A. This will go to section 112A. Old company bought, given off to me. People will discuss this in capital gains. Capital gains will say any kind of transaction happening from parent to its subsidiary are fully exempt from tax. The cost of acquisition for me, who am I? Subsidiary will be the cost of acquisition of parent. Period of holding for me will be the period of holding of, matlab now Rahul kya? Santa's period of holding is 2021. Santa's period of holding is 24-25. Santa's period of holding is 24-25. Matlab if Santa now decides to sell, this will be a long-term gains. Section 190, tax rate 12.5%, exceeding 1.25 lakhs. Very good. Any doubts on this part? Yes, let's move. It says I have units of listed debentures purchased in 2021. Who purchased? Banta purchased, given it off to me. I now have the listed debentures. Does someone know the law about listed debentures? Very good. Yes, income tax comes and says under the old section 50AA or the current 179, I think, section comes and says any bonds and debentures under income tax will always be considered as short-term gains. It does not matter about your period of holding. Tell me people, short-term gains, can I classify it under 196? No, because that only talks about equity shares. This is short-term others. This is short-term others. A short-term others, I will ask a question. Is it depreciable, non-depreciable? This is therefore 20. Very good. This is going to be 25, which is nothing but 22 plus 10 plus S. Hey, correct. Come on. I have a vacant land purchased in 26-27. Who purchased? Banta. Gave it off to me. My period of holding is 26-27, which is less than. Hey. People, immobile property, period of holding requirement. Very good. 2 years, 24 months. Which means this asset is short term. Tell me people, this is short term. Depreciable, non-depreciable? Tax rate. Very good. Correct. Yes, come on. I have WDV of furniture and fixture used in business. What did I take over? Old second hand furniture and fixture. People, violation of condition. Why? Because very good. Furniture and fixture sits in a separate block. I have a block of building, furniture, plant and machinery, ships and intangible asset. Anything other than plant and machinery is a satisfaction of condition. I don't have a problem at all. Matlab, this will not violate my condition. I have purchased it in 2021. I have purchased it in 2021. Who purchased? Banta. Given it over to me. People, long term, short term. Why? The block is ceased to exist, assume. Long term, short term. Long term, short term. From 2021 it is 6 years, no? So long term only, correct? No? People, capital gains has a specific rule. Any depreciable asset is always a short term asset. It can never be a long term gains. Hey, hello. Yes, Apo, this is also going short term. Tell me people, short term, 111A or others? Others, but this time this is a depreciable asset, taxing at the rate of, very good, 15%. Correct? Yes, come on. Last one says factory building. People, factory building will violate, not violate? Will violate, not violate? Will not violate the condition. I purchased it in 2019-20. Short term, long term. Again short term, because building is also a depreciable asset. So this is also going short term, capital gains rate 15%. Now I don't know how many of this I'm going to sell, but this is what the rate should be. Correct? Any doubts? Moving on. Yes, people, these are all the costs given. I don't need the cost, I need the sale price. I need to calculate profit, no? So I'm waiting for the sale price. Let's wait on it. Yes, reading on further. It says a portion of the building was let out for a rent of 35,000 per month. A portion of building was let out for a period of 35,000 per month from the period November to March 27. Municipal taxes has been paid on this building for 13,000 rupees. Tell me, is it violating my conditions?
No.
Why? People, I should not do anything other than manufacturing, no? Very good. I should not do any business other than manufacturing. This is not my business activity. This is taxable under IFHP. Can I tax? Yes, people, taxing 35,000 into 12. 5 or 12? 5. 35,000 into 5. 1,70,000. Hey, HP format, if you remember. GAV minus MT. You will get NAV minus 30% standard deduction minus interest on loan to arrive at HP. I've been given MT. Why? No expenses can be claimed as deduction. Upon this will be left as it is. Can I claim 30%? Answer is no. People, what is it called? Deduction. And what did I tell you? I will not give you any deduction of expenses. People, 30%, if you remember, is a replacement of all general expenses. Instead of giving you repairs and everything, I am giving you 30%, which is technically a deduction only. Will I grant that also to you? Not giving that also to you. Matlab, income is number 1,75,000 is getting taxed at the rate of 22%. I am going to tax 1,75,000. Hey, hello. Yes, sir. Yes, sir. Come on. It says land received from Banta Limited was leased out for the period of November to Feb for 20,000 rupees. This time I have leased out land. Tell me, violation, no violation? Taxable under the head. Very good. Why? People, house property has a condition. You can only tax something under HP when there is a building attached to it. Do you see a building? This is taxable under IFOS. Amount received 20,000 for 4 months. 20,000 for 4 months becomes taxable at 80,000 rupees. I paid some land leveling charges. Why? Very good. Matlab, this is going to be taxed at the 80,000 rupees on 22%. On 22%. Clear? Not clear? Yes, come on. It says this land was subsequently sold in March at the value of 9.3 lakhs, where I incurred an expense of 0.2. Now in the month of March, I have sold this land, which means the capital gains above is correct. Yes, which one? Land up. People, I sold for 9.3. A CG format. Sale value minus cost of transfer. Can I claim? People, capital gains expenses allowed. So matlab it is 9.3 minus 0.2, which is 9 point minus cost of acquisition 7.2 minus cost of acquisition 7.2. Profit hits 1.2. is my taxable short-term capital gains at the rate of 20? Very good, which means I can confirm to you right now, one answer has been clear to me. My short-term capital gains on land is 1.9 lakhs at the rate of 22 percentage. Any doubts on this part? Are we sure? Yes, come on, read further. The following assets from Banta Limited were also sold off. They have also sold these assets. First, I sold equity oriented funds. We discussed it on the top section. 198, sale value is 6.3, expenses incurred 0.03, profit is, sorry, net consideration is 6 lakhs, purchased for 3.2, profit hits 2.8. This is long-term capital gains on EOF 2.8 at the price of 12.5, exceeding 1.25 lakhs. Very good. Correct. Come on. Next one says units of listed debentures sold for 3.9, expenses incurred 0, net consideration is cost price 0. It was a bonus debenture. Cost price is 0, profit is 3.9. 3.9 ka profit, gains is called short term gains. Depreciable, non-depreciable, non-depreciable, tax at the rate of, very good, 22 percentage. Yes, yes, come on. Next one, furnitures and fixtures. People, this was the only asset in the block. Upper block has ceased to exist. This becomes capital gains. Sale price 4 lakhs, expenses 0.8. People, capital gains by expenses allowed, not allowed? 100% allowed, no doubts. There is only one expense which I am not allowing. HP, IFOS, middle everyone we said allowed. 4 minus number is 3.9, cost price 2.6, number hits 1.3, which means now I have short-term capital gains on depreciable asset. Number is, yes ma, I have sold it before the asset closure. Depreciation only happens after the end of the year. If I sold it before the end of the year, can you give depreciation? No depreciation allowed. Yes, we'll discuss it in PGBP. The depreciation is only granted when the asset is available at the year end. If there is no asset in the year end, there is no depreciation to be granted. This is not accounts. I cannot give you partial depreciations and all. Not allowed. Yes, very valid question. People, amount was 1.3, tax at the rate of, very good, tax at the rate of 15 percentage. Agreed? Agreed. Come on, last few things. That's all. A question says compute the tax liability of Santa Limited, assuming the company wishes to exercise the option under section 201. Company wants to go 201. Have you seen any violations? No, I didn't see any violations. Why? Because never bought old plant and machinery. Don't see any splitting up or reconstructions also, because it is not the year of formation. It is not the year of formation. All my incomes are from other heads. Nothing is from PGBP. PGBP only has manufacturing. So I don't see a problem here at all. Yes, which means I can confirm my other incomes. I think I had a PGBP income of 16 lakhs being taxed at the rate of 15 percentage. 10 lakhs being taxed at the rate of 30 percentage. I have some HP income. I wrote it here. 1 lakh 75. Huh? I have HP income of 1 lakh 75,000 at the rate of 22 percentage. I have an OS income of 80,000 at the price of 22 percentage. Come on, let's see. M plus. Final answer. Is this after cess? Did you apply surcharge? Hit people. It should be 16 lakhs into 15 percentage M plus, 10 lakhs into 30 percentage M plus, 1.75 into 22 percentage M plus, 1.9 into 22 M plus. 2.8 में से we have to reduce 1.25 lakhs and then do 12.5 percentage M plus. 3.9 lakhs goes for 22 percentage M plus. 1.3 lakhs at 15, 80,000 at 22. What's the MRC? Seven 445 is the MRC. Check karo. No. Is this before surcharge and cess? Number is 77. Check karo everyone. 762575, adding a 10% surcharge and a 4% cess. 3 should be the final answer. Should be the final answer. Yes, this one question basically covers all your tax rates, people. Yes, I devised the question in such a way that you can basically cover all your tax rate computations of 201 series. Yes, these kind of questions have never been tested in exam. I said never makes it this complicated, but yeah, when you want to learn it right. Correct? I think this should be the right answer. 7, 8, 17. What happened? People check karo. I wrote 1,75,000 at 22 percentage, match ho gaya. I have 16 lakhs at 15 percentage, 10 lakhs at 30 percentage, match ho gaya. 2,80,000 at 2.5, 2,80,000 at 12.5. Can you check me this number, excess of 1.25? 2,80,000 minus 125 into 12.5, match ho gaya. 390 at 22. Yes, 390 at 22. 190 at 22. 190 at 22 is also matching. 130 at 15. That is also matching. 80 at 22. 744,975 तेरे को आया था ना? People, is my numbers wrong? I'm not sure. I might have made calculation mistakes. Am I is wrong? Total is wrong, is it? What's the number? 762,575. Adding a surcharge, final answer is 872,390. I'll have you modified this when I give you the books out, people. Yes, but whatever. If you've understood the concept, that's more important. Clear? Yes, so this is what the computation comes back to you. I hope you understood the whole computational model. Yes, so we did the whole tax rate, we added the 10% surcharge, we got the 4% sales, and that's how the answer came back to you. Clear? 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 Does anyone have a doubt? Are we good to go? Perfect. Yes, this is what your new regimes are. Now, from an exam perspective, as a CA finance student, from an exam perspective, which part of this is important for exam is the question. Which part of this is important for the exam is the question. Is the conditions important for exam? No. No. None of the conditions are important for exam. Let me clarify. ICAI always asks you the new tax regime as a part of compulsory question number 1. Which means ICAI will come and say, beta, compute total income, compute tax in the manner most beneficial. Which means ICAI is more focused on your total income and tax rate computation. At that stage, do you think ICAI is going to spend any more time on asking you the condition fulfillments? No, which means ICAI will come and tell you all conditions are fulfilled, just compute tax and give it to me. Matlab, all these conditions that we discussed right now are not relevant to you, because logically speaking, most of the conditions are to be satisfied in the year of incorporation, which is going to be in 2024. You are right now not even there in 2024, you are in 26. Matlab, these conditions have no relevance to you. They have no relevance to you. The only conditions which are relevant to you are all sitting here. The conditions which you cannot claim as deduction, which we told we'll discuss in the subsequent chapters, which means anyway none of this is important. None of this is important. Yes or no? Yes. The parts which are important are only the amendment which has been brought here, the amendment about the MAT credit, which we'll discuss when we go to MAT chapter. Right now you will not understand it, which means in this whole chapter there is only two things which are relevant. One, what is the tax rates, and second, the MAT credit part. The MAT credit part I'll write in MAT credit chapter, which means the only thing important in this chapter is your tax rates, which we have already discussed. Yes, which is why in the notes that we only wrote tax rates. We have not written anything else. Nothing else is important in this chapter. It's more for your reading with me today, but beyond that, there is no relevance of this from an exam perspective. Any doubts on this part? Are we clear? Yes. Similarly, people, for individual module also, only the tax rates are important, which we have written. The tax rates, the surcharge, the rebate has been written. The conditions relating to those are not relevant at all. We will discuss it when we go to the respective heads. Yes. Yes. That is what the chapter looks back to you. Is there any doubts? Are we clear? Yes, good. People, if you have completed the tax rates with me, I think you and I have written all the tax rates relating to individuals. We have written the tax rates relating to company. Who's left? Who's left? Firm is left. Firm is left. Yes, now before I proceed on to firm, I have a very simple question. People, you confirmed to me that a company is not going to be poor. Matlab, it cannot claim rebate. But a company can be rich. Matlab, a company can have surcharge. A company can have surcharge. Now, my question is, imagine the company's total income is 1 crore 1 lakh. Imagine the company's income is 1 crore 1 lakh. You know, at 1 crore surcharge would have been, at 1 crore surcharge would have been 0. And at 1 crore 1 lakh, it becomes 7%. Question is very simple. Do you have marginal relief? Can a company claim marginal relief? Can a company claim marginal relief? Can a company claim marginal relief? The answer is yes, it can. Yes, it can. People, India has never been bad to rich people. And when I say rich people, I mean any rich person. Whether you are an individual rich, I will be nice to you. Company richer, even better. I would still be eligible for marginal relief. Income tax does permit you marginal relief. But yes, if you're smart enough, you would have realized it. People, if I'm in section 200 series, I will not get a marginal relief. Tell me why. I'm applying a flat surcharge rate on every income. Apo, there is no concept of marginal relief there because there is no limit itself. Apo, marginal relief as a concept comes only in old regime. It's a concept which only comes in old regime. But yes, you are eligible for marginal relief. Be very clear on that. Are we clear? Yes, that's the last thing for you to write down, people. The last thing, I don't know if you have space next to the surcharge. If you don't have it, write it on the bottom. You can write down saying, MR, okay, just let's not be Gen Zs here. Marginal relief is available for company as well. A question, people, I'm a foreign company. I'm a foreign company with income of 1 crore 1 lakh. Can I claim MR?
Yes. No. Yes.
Answer is yes. People, India is favorable to any rich person. In fact, a foreign rich person is even more prestigious to me because he's literally spending his dollars in my country. Yes, I'm definitely going to give it to you. I want you to realize this fact that a non-resident can also claim a marginal relief, even in an individual setup. Even in an individual setup, a non-resident can also claim marginal relief. They only have problems with marginal rebate because you can only be a rich Indian poor. You cannot be a foreign poor. I will only give you rebate when you are a resident individual. Matlab, when rebate itself is not there, marginal rebate never comes into question. But a surcharge was applied on both the parties. Apo, marginal relief is also on both the parties. Be smart and clear about it. Yes, I am giving you MR on both the scenarios. No doubts at all. Are we clear? Clear about this? Yes. That leaves me with the last person. The last person is called firm. The last person is called firm. Honestly, if you come and ask me, people, across everyone, I believe firms are the ones which are being mistreated the most right now. Yes, across individuals, across companies. Somehow I have a feeling the firms are being mistreated the most right now. Why? They have a flat 30% tax rate with a flat surcharge of 12% above 1 crore. Do you have an old regime? Sorry, do you have a new regime? Firms have no regimes at the end of the day. Yes, nothing is being given to them. They have a flat tax rate concept, which means income tax simply comes and says, as a firm, your tax rate is 30 percentage, and your surcharge rate is what, 12 percentage if total income crosses 1 CR. If total income crosses 1 CR, do you have a new regime? Can you claim MR? Will I give you marginal relief?
No.
Yes, I will give you marginal relief. People up to 1 crore, there was no surcharge. After 1 crore, you now have a surcharge, which means you're a richer firm right now. You also have MR, will be given to you. Don't worry about it. Clear, clear, clear. Any doubts? Are we good to go? Yes, that leaves me with the last person. Something which I personally feel should never be tested in exam, is not very important. We have a concept called as cooperative society. Have you heard about it? Anyone knows what is a cooperative society? For those who watch Tarak Mehta, Gokul Dham. For everyone else, what is a cooperative society? People, the name suggests the answer. Break English.
Anyone can come.
People who cooperate with each other. Very good. Think. The name suggests the answer, people. Cooperative society is basically an entity which technically never gets incorporated for a reason of making profits. They're incorporated for one simple reason. They want to support each other. Take a very simple example. Imagine we are all sitting in Rajasthan and I'm a farmer. You're also a farmer. People, if I go and sell my goods separately, the market will always try to treat me bad because I may only have agricultural skills. I may not have the marketing capacity to talk properly. Yes, so my treatment will be very bad. People will not give me the right price for my things. But imagine if 10 farmers now go together and go and hit the market coming and saying, we all 10 farmers will together sell it at this price only. You think market will object right now? Which means now we have got unity power. At the same logic, imagine this. People, Rahul as a farmer, unfortunately is not doing really well today. Is not having enough money to grow crops. I need money, loan. I need money and loan. I go and approach a bank. Bank will not give it to me. Why? People, bank will only give you when they have a guarantee of return. Rahul's guarantee of return is good crop season. Today, if there is no crop season, what will happen? I will not pay back the money. If a bank is interested to give me, not interested to give me. But imagine if you people are earning a little bit good money this year. You want to be nice to me. What will you do? You may grant me loans. I am ready to pay interest. The problem is bank is not giving it to me, but you people are ready to give it to me. Like this, what will happen? You will come and say, Rahul, today I am helping you. Tomorrow, you help me. We are all coming together to help each other. Yes, when we all form together a common operation, this is called a cooperative society. Yes, the best example I can give you right now for a cooperative society is almond milk. Have you heard about it? Early in the morning, dad will go. They'll have a card in hand. They'll go to one shop. That shop will have big cards and all. The dad will show a card. Card show pannone. He'll give you milk. A person, if he buys separately, he'll pay 18, 19 rupees. Your dad will show the card. He'll only get it at 15 rupees. Why? Because the moment your dad bought the card, he became a member of the society. And as a member of the society, they are like, okay, you are part of my family right now. I will sell it at a discounted price. Yes or no? Yes or no? Up at the end of the day, people, a cooperative society is primarily created to help each other. Correct, not correct. Yes, here came a simple problem. The problem is very simple. People, I am a farmer, you are a farmer. You gave me loan. I don't think I want your milk, but anyways. Yes, you gave me money. I have to pay you interest. Yes, but people, imagine you are only able to sponsor me 10 lakhs. Rahul is in the requirement of 50 lakhs. Difficult. What will you do? Rishmita has 10 lakhs. Adarsh has another 10 lakhs. Badri has another 10 lakhs. Nikhil has another 10 lakhs. What will you do? You'll pool the money together and then you'll give me 50 lakhs. People, Appo, when you're pooling the money, does Rahul have to individually pay you guys interest? What will Rahul say? What will Rahul say? Let it all become part of a common fund, the fund of society. The fund of society. Rahul will also pay interest to the. Let the profit be in society. This profit which society made, he will. No. He will split between all the members. He will split between all the members. Or we can use it as a kitty party. Have you heard about kitty party?
No.
People, your families would have done it, moms specifically. Yes, kitty party concept is a very beautiful example of cooperative society. Basically, what happens is every month your mom will go and contribute 1,000 rupees to the party. There is a pool fund. Yes, what will happen is at the end of the month, one person will be selected. They'll select one member, one woman from the whole lot, and that woman will be given across all the money. What this woman has to do? Give party. Give party. Yes, that is called kitty party concept. Nice, no? Nice, no? It's called kitty party concept. People, everyone does it. At least in Jain Marwadi families, we do it very often. Yes. So basically, every woman will sponsor a little bit money, and then the money will be pooled together. End of the month, we'll party. We'll party. Now, my question is very simple. Understand, every woman gave 1,000 rupees. The money is sitting in the fund of society. Apo, think very carefully. The woman and the society are two separate parties. Cooperative society has got 1,000 rupees from the members. For the society, this is technically income. It is technically income. Does the society have to pay tax? Yes, no. Have you ever talked to your parents about it? Have you ever told your mummy, the kitty party money and all which you're giving, pehle 30% department, then only your party? Ever thought about it? No? No? Why? Limiter, cooperative society says every rupee is taxable. Limit, I'll tell you, for the first 10,000 it is 10%, for the next 10,000 it is 20%, after that everything is 30%. Worst only cooperative is. The reason is very simple. Think about it logically. People, I could have done this in two models. Rather than everyone putting money in the society and then society giving me party, all women can together, one by one, give the money to the woman who's going to conduct the party. Which means logically what would have happened? If every woman would have gone and given the money to the woman, this would have been a personal expenditure. Just because a cooperative society is sitting in the middle, does the society earn anything? Because whatever money comes to the society moves on to the respective people. Yes or no? Yes or no? But technically, if I have to tell you this very rudely, society is purely acting as an agent, intermediary. Do you want to tax these kind of things? Do you want to tax these kind of things? Income tax law, we call this as doctrine of mutuality. Doctrine of mutuality. Basically, Supreme Court comes and says a person can never earn income from himself. A person can never earn income from himself. Logically speaking, cooperative society is now an agent. Apo, technically, what is the society doing? They are collecting money from you and giving it back to you only in the form of party. Yes or no? Apo, society collected money, gave it back to you in the form of party. Apo, technically, you got your own money back. Looks like a personal expenditure. Would you want to tax these kind of transactions? This is called doctrine of mutuality. In India, cooperative societies are technically exempt. And I'm using this very carefully. Technically exempt when they are supporting each other. When they are supporting each other. Correct, not correct? Yes. But here is the question. People understand this logically. Every woman gave money, put it into a fund. Where is the fund right now? Where is the fund right now with the society? Society will give the money only at the end of the month. Until such time, what will the money do? Until such time, what will the money do? Either it will sit in someone's bed, or you will send it to a bank. You will send it to a bank. Bank is now going to give you. Tell me, people, is this interest taxable or exempt? Why? It's an additional income. It is an additional income which the society earned. Did the society earn the income from the members or from the bank? Which means this is an external person coming into picture. A cooperative society itself has an intention. Intention is money should come from members. Money should go to. Here money is coming from. Is the mutuality satisfied? Supreme Court passed a judgment clarified saying if you earn any additional money which is not a member, all those monies will become taxable. And that's where comes the question. The question is, a cooperative society is technically exempt. But if they start earning these kind of numbers, you have to now pay tax on it. Which then brings the very important question. At what rate do I tax? At what rate do I tax? Because a cooperative society is neither an individual, nor an HUF, nor a firm, nor a company, nor an AOP, nor a BOI, nor an AJP. It's just some random group that we created together. It had to be find out a different tax rate. Yes, at that stage, income tax decided, you know what, technically a cooperative society is never taxable. But if they start doing these kind of nonsense, I will start levying heavy taxes on you. What is the heavy taxes? People is sitting up here. Let me show you the tax rate and you will realize why being a cooperative is really bad. The tax rates come and say for the first 10,000 rupees, you're taxable for 10%. Hey, just to clarify, for the first 10,000 rupees, matlab, no basic exemption limit. Matlab, every rupee you earn is taxable right now. And that to 10,000 rupees itself. People there and all, we are talking 2.5 lakhs, 3 lakhs, 10,000 rupees. Income taxes for the first 10,000 rupees, I will tax 10%. Next 10,000 rupees tax 20%. After that, everything is 30%. Cooperatives are being treated very badly. They're being treated very badly. Ayana. Yes, at this stage, I want you to realize something else. People, Avin we told about is a cooperative society. Now look at this very logically. Avin, when I have a membership card, I get a discounted price. But if a random person comes and buys, he buys it at higher prices. Technically, that is Avin's additional profit. On that additional profit, Avin is paying 10, 20 and 30. You think Avin is going to operate like that? Definitely not. Avin will say, sir, what the hell? If I would have been a company, it would have been far better. At least as a company, I would have paid 25%. Hello. Yes, I could have rather chosen the new regimes also. I could have gone 22, I could have gone 15 also. You never know. Just because I'm a cooperative society, are you treating me so bad? Seems unfair. But at the same time, in India, at some point of time, we realized more than a company, a cooperative is doing better. Not in terms of tax, but in terms of operational excellence. Why? Because a cooperative is governed under Companies Act. You have a hell lot of idiotic things to do. One, appoint a board of director, conduct meetings and everything, have to file forms at the end of the year. You have to go and file so many regulations and all, start audit and all you have to do. Waste of time and money. At that stage, they were like, you know what, cooperative society has a special act. It's called Cooperative Societies Act 1932. And that act comes and says, no worries, nothing you need to do. I don't want anything from you. I don't want any directors, no nonsense. Anything you want is fine. Up people at certain stage realize cooperatives and companies are technically looking the same. The only one person who's causing problem is income tax. Hello. Yes or no? At certain stages, Avin and all said, you know what, I want to continue as cooperative only. I don't want to become a company. It's irritating me at so much point of time. But at the same time, income tax was causing troubles. At which stage, income tax realized, you know what, today's era, people are preferring cooperatives over companies. Although the operational model is the same. And therefore, income tax decided, you know what, let's do one thing. Whatever regimes we brought for company, let's bring the same regimes for cooperatives also. Matlab in company you learned 115 BAA, 115 BAB. In the old sections we now introduce 115 BAD and 115 BAE, which is nothing but copy paste. Everything remains the same. Nothing has been changed. Today, right now we call it 200 and 201. Nadule we introduce 202 for individuals. Upper cooperatives are right now 203 and 204. 203 is the same as 200. 204 is the same as, which means all tax rates remain the section now comes and says in 203. I will let you become a cooperative society. See if all the provisions match. It says 203 says special tax rate for resident cooperative society. A person who's a resident cooperative society can pay tax at the rate of 25.168, same as 200, same as 200. Special incomes will be taxable at special rates. Cooperatives were liable for AMT, and therefore they said because they are exempted MAT, here I will exempt AMT. Copy paste, copy paste. Then we moved on forward. It said 204, where it says if I am a resident cooperative society engaged in manufacturing of articles and production of things after 1st April 23, same as 201, except for the date alone, people, except for the date alone, because income tax realized it later only, and therefore they bought 1st April 2003. They said the tax rates will be the same as 201. Do you have to read it once again? Do you have to read it once again? No. Matlab, I already know the tax rates. PGBP is 17.16. Unreasonable is 30 plus 10 plus 4. Short terms are going short term rates. Long term are going long term rates. HP is going 25.168. IFOS is going 25.168. Don't give. Copy paste provisions. Copy paste provisions. Now tell me, people, if you are a cooperative society, would you prefer old regime or new regime? Why? Idiotic it is. Old regime comes and says for every 10,000 rupees you have to pay tax. Here I can say for everything flat pay 25. Yes or no? What would I prefer? If I'm really into the setup where I'm saying cooperative wants to make external profits, I would say let's go new regime. Let's go new regime. If you're in a model where you say, you know what, my society is fully exempted always, then in that case I don't really care. You can go old or new, it doesn't really matter. Yes, but now if you think about it, honestly, if you come and ask me between a company and a cooperative, I would choose a cooperative, because a cooperative has no compliance issues. Zero compliance they have. Zero compliance. You don't even have to get an audit done unless tax audit applies, because tax audit is a mandatory thing. But apart from tax audit, you don't have to do any compliances. You don't need a director. You don't need any kind of board meetings and all to happen. In societies and all, you would have seen they will conduct AGMs. They'll conduct AGMs. They'll select two people, one president, one vice president, then secretary, and then treasurer. Adikapram committee members. Yes, all for you to do one thing. Diwali we'll do party. That is what a society does. What else do they do? Yes, wall paint panno, kila sewerage clean panno, one staff will come, avanukku kaas kodukano, security appoint panno, Diwali party. Maximum work. People, do you think you need a company for it? No. Now tell me this very carefully. People, I don't know how many of you live in an apartment. Live in apartments? Yes. In apartment, you pay something called membership fees. Tell me, membership fees which the apartment collects from you, taxable, exempt? Why? Very good. People, the membership fees you have paid is going to help you with what? Living. Why do you pay the membership fees? Because this membership is collected from you for multiple reasons. They will help you sponsor the security guard fees, the painting expenses, the repair expenses. I could have rather paid it myself. If I would have paid it myself, this would have been a personal expenditure. Matlab, technically, I am making profit from myself. Is it taxable? Is it taxable? No, it is not taxable. Correct, not correct. Correct, not correct. Yes. Similarly, people, you might have seen some clubs and all. Rotary Club. One more. Bangalore Club. What other clubs you have? Toastmasters. Debate clubs and all. Heard about it? You pay something called membership fees. Forget. Jito people are paying Jito. Jain people, you are paying Jito and all. No. That big club and all which you have. Party and all you do. Yes, youth club and all. Some diamond teams and all are there. I always wanted to be a part of it, but I was not Jain, so didn't allow. Yes. Jito clubs and all you have. You pay something called lifetime membership fees. Taxable, exempt. Taxable, exempt. This is exempted, fully exempted, because G2, what is happening? The membership fees which you pay, they will help you do other things, activities and all which you do, extracurricular things, and the boat visit and all, pottery makings and all. Zakir Khan you'll call for stand-up shows. Correct, no? Correct, no? You're part of G2, I guess. Munjile teride. She is part of G2. Which club, ma? Youth club, huh? Vivek is there in that, I guess. He's a committee member in that. I'll check it. So, yes. Basically, people, whatever expenses you did is helping out you only. You could have rather taken a stand-up comedy show ticket yourself. But because you paid it to G2, G2 is now asking that person to come down. Technically, your own personal expenditure. Fully Exempted, fully exempted. Yes, we have certain case laws on this. We will discuss when we go to cooperative chapter. Right now, this is what the topic is. The topic basically talks about doctrine of mutuality. A person will never make profits from himself. A person will never make profits from himself. Are we clear on this part? Yes, that is what cooperatives are. Honestly, if you come and ask me, I would say skip. Don't read something new, because at the end of the day, same as companies will not be important. There are some provisions relating to cooperatives which we'll discuss as we progress on the chapters, but right now this chapter can be skipped off to that extent. Any doubts on this part? Are we clear? Yes. Is the tax rates clear to you? Yes. So this is what the tax rates which you have in income tax, people. The whole tax rate module where you understand how tax rates work for individual, HUF, AOP, BOI, AJP, companies, firms, and cooperative societies. This is what it is. I am not giving you notes on cooperative because I don't want you to read it. Simple, straightforward. Let's keep it there. Yes. Now, from an CA final perspective, which ones are important? Individuals will come in non-resident chapter. Companies will come as part of question number 1 itself. Firms will come as part of question number 2. That is what it is. Yes. So you have question number 1 for companies, question number 2 for firms. Individual taxations will come as a part of non-resident chapter. You don't know the flow of the questions. Don't worry about it. As we progress, I will give you the flow of the questions as well. Yes. After this, people, every time we proceed on a chapter, Rahul Bhaiya's responsibility will to come and tell you this topic has to be read for this chapter. This topic will have to be read for this chapter, so that by the end of the batch, what you can do, you can say individuals, this and all has to be read. Firms ke liye this and all has to be read, companies ke liye this and all has to be read. So you already know for question 2 this to be mugged up, question 1 this to be mugged up, question number 5 this to be mugged up. Make it easier for you. Yes. Otherwise, you and I both know chapter 8 deductions. You have so many deductions. Some are eligible on companies, some are eligible on individuals. Do you want to read everything together? No. You want to make it sure that okay, if a non-resident question comes, these are the deductions to be worried. If a company questions come, these are the deductions to be worried. Becomes easier. Yes. So we'll do that as we progress in the classes. But right now, tax rate perspective, this is good enough for you to go. Any doubts on this part? Are we comfortable enough? Clear to go? Yes. This is what the chapter on individual taxation is. Comfort hai, people? Understanding the tax rates. Yes. We are never going to discuss this again until the September start. Because after this, we are going to start with heads of income. Yes. So tax rates are never going to be discussed after this. I am assuming you will remember until with a very clear word on assuming. Yes, assuming is a part and parcel of life, because we are all doing the same thing. You are assuming you will get a rank. I am trying to assume you will pass. Yes, little bit of an effort on the consistency part, nothing else, people. Yes, I will try with that. Yes, you don't have to read, I will make you read it. Yes, I will keep disturbing you every single day with random questions. Yes, so one random day I'll wake up and I'll be like, you know what, somewhere in July 25th we discussed something called individual tax rates. Do you remember the rate? Yes. I'll make you feel ashamed about yourself. Happiness. Yes. I didn't tell you this, people. I'm a very big sadist. Very big sadist. I get happiness when you are depressed. Sadness is a very small thing. Depression is the ultimatum. Yes. I'll get you depressed in life. Don't worry. Yes. To that extent, I will make sure that I break you down. Yes. But again, pressure. CA final pressure. Yes. Otherwise, how will you feel like CA final went tough? Tomorrow, if you go like that other idiot sitting in the north side and come and say CA final is like 12th standard. Yeah, people, my Biradri guy only. I don't like him myself. Yes, I don't want that to happen. I never am going to come and confirm to you that CA final is easier than 12th. No, I will make it difficult. Yes, that is my responsibility. So let's do that together. That's not a problem at all. Yes, yes. Any doubts on this? Clear? Now, to complete the chapter of people, we are technically done with everything. But if you remember, we discussed somewhere about special incomes. Capital gains, winnings, online winnings, BDS, royalty, carbon credits, unexplained income. Very good. Now you will basically understand everything, people. By logic, winnings are technically nothing but casual incomes. Examples like lottery, horse race. I'm driving or I'm winning. Basically betting. Very good. Next, gambling. Next, casinos. Very good. Next, people on the Hindu and all, you would have seen crossword puzzle. You crossword puzzle, you send it to a Hindu, they'll give you money. That is also casual income. Next, kaun banega crorepati. Very good. 7 crore KBC. Who wants to be a millionaire? Next, other useless shows. Splitsvilla, Big Boss. Jail. Jailer. What is Kangna Ranaut show? That useless one? Lockup. Are you? Lockup. And one more is going on right now. No, latent में. But that is because of your effort, no? Talent. Bad talent, but talent. The Sakshi which came recently. For those who know, yes. Sakshi is का problem ही है, पता नहीं क्यों. Let's not go there. Leave it there. Yes. So whatever. Latents, and then you have these other shows. Shows like Superstar Singer, India's Got Talent, Indian Idols. These are all winnings. These are all winnings being taxed at the rate of 30%. That is what income tax confirms to you. Online winnings basically goes to your online platform. All winnings which you get from Rummy Circle, Dream 11, Stake. Stake क्या होता है? What is stake? Online betting. Online winnings only. Next. Anything else? YouTube. What are you doing in YouTube? Super chat, that coins which they give. How with the direct donations? That is online winnings, yes. But if you are getting money from YouTube itself for the subscription or the viewers and everything you get, that no. Let's say the YouTube Premium and everything, that is taxable as PGBP. That's not online winnings. Yes. Let's say, for example, I'm posting a reel out. By the way, I'm posting reels, people. For those who are not following, bad people. Very bad you are. Yes. If I'm posting reels and I'm not going very famous right now, but imagine if I go famous and the Instagram starts paying me money for it. Those are all business incomes. Those are all business incomes. That business, other sources, whatever you call it. Yes, but will not be online winnings. I basically am talking about cases where I have to first dip money, play some games and then return money. That is what is called online winnings. That is be taxable as online winnings. Yes. Then we have VDS, virtual digital assets, basically called as cryptocurrencies. Basically called as cryptocurrencies, where income tax is saying technically the asset has no validity. It's getting its validity from these kind of data minings and all those stuff. That is called cryptos. I have a question. People, you know derivatives? Mutual funds? Is it a VDA? Why? It's getting value from shares only, no? Not really. What? VDA can also be controlled. You control. What is the problem? India never decided to control. That doesn't mean that it's not crypto. I gave you the answer already, people. I have a derivative of a share. I have a valid asset in my hand to look into. Cryptos don't have a valid underlying asset itself. It's just some random data mining, software buildings and some codes and all which you're using. There is no validity. People are still not clear on how crypto money rises and falls. Which means it's working based on a source code. It's not working based on an asset. If you have an underlying asset, it becomes a derivative. That becomes a normal capital gains. But if I'm using source codes and all, that is not a asset. It will move to VDS. It will move to VDS. That is why the name itself says virtual digital assets. Assets which don't have a validity. Assets which are done by codings is called a cryptocurrency. Any doubts on this part? Be clear on this. Any doubts on this? Yes. The reason I'm asking you this is because people, you might have seen this sometime. Imagine if you go and buy a laptop. The company will basically come and say, sir, when you buy a laptop, for the next 1 year, free service. And if you've done India's properly, financial instruments will come and say, this is like embedded derivatives. English. No idea. No idea. Have you heard about something called CCDs? Compulsory convertible debentures. If you think about this logically, today you have a debenture, but in all practical sense, you have a debenture and an option given to you. Option to convert to shares. If you have read your financial instruments properly, Indians will come and tell you that you have to recognize both of them separately. You'll have to take your CCDs and you have to split in such a way that some part of it will be treated as debenture, the other part of it will be treated as an option, equities and liabilities. Yes or no? Similar to that, imagine if I am having a laptop. People, when I sold a laptop, I also got a ticket. The ticket comes and says, I have a free service option for the next 1 year. I have a free service option for the 1 year, which is also like an embedded derivative. Right now, Rahul received 2 things. One, laptop. Second, and free service option. Ayana. This is where India's 115 comes into picture. Ind AS 115 will come and say that when you sold a laptop, you technically never sold laptop. You sold two things. One, a laptop, and also a free service warranty. Free service warranty. At which stage Ind AS 115 will say split. Show how much is your sale of laptop and show how much is your sale of warranty. Yes or no? Yes or no? People, I'm connecting some things from financial instruments. Feeling bad, no? Don't remember, right? Now, my question is very simple. Today, you have got a laptop along with the free service. Along with the free service. This free service is technically a derivative item. I would have not had this if I don't have a laptop. Up when they sold me this service warranty, is it a VDA? I never got anything in my hand. It was not it was just confirmed I'll get a 1 year free service warranty. Do I have an asset in my hand? That is the whole point. Is it a VDA? Is it a VDA? No, it is not a VDA. Yes, there was an explicit confirmation on these kind of things where they said additional items coming to you is not a VDA. Another example which came back to you people, I don't know if you have gone to these shops like Zudio and Tata has one more. Westside, thank you. Yes, you have Westside, Peter England and all. When you buy shirts and all there, they will suddenly give you something called mileage points. They'll give you a special card and in the card they'll put some mileage points. And they'll come and say, beta, if the mileage points increase to a certain number, tomorrow you can buy a free shirt from me. You can buy a free shirt from me. Matlab, every time I purchase a shirt, I will get some free mileage points. And this mileage points can be redeemed tomorrow. Tell me, this mileage points which is loaded in my card, VDA. Rahul can take this mileage points card, give it to Rishmita, say Rishmita go buy shirt. Rahul got profit. VDA. Why? This is virtual digital also. Points are coming digitally only to me, no. Sorry? Very good. Same example which I told you. Crypto's bigger problem is I don't know how to value the number. The numbers fluctuate based on a source code. Here I am getting mileage points based on purchases. Defined numbers are coming in. Can tomorrow mileage points change? Can tomorrow department suddenly come and say instead of giving, sorry, department bolo. Can suddenly Peter England come and say instead of 10 rupees now the price is increased to 15. If I invested 10, I will only get 10 ka price. Will it suddenly fluctuate? Virtual digital assets will fluctuate. This will not fluctuate. It's a fixed 10 rupees which I have in my account. Ayana, is it a VDA? No, it is not a VDA. This is also explicit confirmed. Yes, we will discuss all these things when we go to TDS chapter, but I'm clarifying a few things for you here. Any doubts on this? Yes, we've understood carbon credits. I told you an example that day. We've also understood patent royalties. The thing pending to discuss is unexplained income. I have a very simple question. What on earth do you mean by what according to you means unexplained? An income on which you do not have a valid source. People, the word gives you the answer. Unexplained means I have not explained something. Who will be asking for explanations? Department, which means department came to me and came and said, Rahul, explain me this. And I was like, sir, what do you want me to explain here? He will ask, you have something in your hand. How did you get it? Tell me, where did you get the money for it? I want to know the source of the money, because if the source of the money is legal, then the asset is legal. But if the source of the money is illegal, then the asset also becomes illegal. In which case, am I bothered about the asset or am I bothered about the source? Unexplained income basically comes and says, an officer can ask you for the source of the asset, source of the money, source of the income, source of the expense, anything for that matter. And you have to explain him the source. Where you explain him the source and he's satisfied, he will let you go. But where he is not satisfied, I will start taxing at an amended rate of 30% with a surcharge of 25% with a cess of. Very good. That is what the understanding is. Are we clear on this part? Sure? 100%? Yes, very good. So people's scenario is like this. Adarsh is the assessing officer. Adarsh is the assessing officer. Rahul ko Adarsh has come and told, Rahul, I see you have 1 crore rupees in your bank account. Explain me the source. Explain me the source. Rahul said, sir, source is very simple. One day, I was walking on the road. Someone is irritating, very irritating. I simply went and killed him off. Luckily, what happened when I killed him, I saw he had a briefcase. In that briefcase, he had 1 crore. I took the 1 crore and I put it in my bank account. That is the source. That is a, tell me, tax rate. Why? Why? Sorry? What is illegal about this? Killing someone is illegal for PMLA Act. Don't come and ask me. You put me in jail for it, that's fine. Income tax cannot question it. I disclose, no, 1 crore bank account. So in income tax return, I will disclose saying 1 crore got from murder. In which case you will say tax at normal rates. Not bad, yeah. People now logically think and tell me, Rahul has told this is from murder. Does assessing officer know? Can he prove it is from murder? Apo Rahul is using some random reason to give it off. Yes, at this stage, my question is very simple. You will tax at 39%. True or false? 39 being the unexplained income rate. True or false? Bro, you were the ones who told me differently. People, what did you tell me? You told me an unexplained income is only unexplained when you don't explain the source. Rahul just now explained you the source. You are not convinced about it. People, the section said what? You don't explain the source, I will tax at 39. Either explain no. Hey, you are not happy. That is your problem. Can you tax me at 39 for it? People, this is being greedy now. This is being greedy. You told me you don't explain the source, I will tax. I'm like, I explained no. I explained I murdered someone, I got the money. What is the problem right now? Source is not. Where is it given in the law that you want to accept it? You see the problem? Yes, this is where drafting issues come into picture. Yes, drafting was modified at a later stage. Unexplained income got clarified in 2 aspects. Income tax said, and unexplained income is considered unexplained when 2 things get satisfied. Either you don't explain the source, or if you explain the source and the officer is not satisfied about it. Which is where the law was modified. The law now comes and says, where a source has been requested to explain, and the assessee either does not explain the source, or if he explains, the officer does not get satisfied, I will treat it as unexplained income. This is the definition that you have to remember, people. The definition is very simple. I am looking for 2 things. Either you don't explain, or you explain and I am not satisfied. Who is I? Assessing officer. Yes. Now the reason I'm giving you this is because, people, you and I don't have to read the chapter. This is the English. Very simple. Yes. The English starts on the top. The English says where the assessing officer deducts something and he's asking you for the explanation of this. Either you don't explain, or if you explain and he's not, it is called. Your job is very simple. People, I will read the line. You have to just insert this word. Yes. So I will say, where an assessing officer is requested for the source of unexplained cash credits. Source of, idiot, how will you source of unexplained? It's source of cash credits. English, people. Where the assessing officer is requesting for the explanation of cash credits, and the assessee does not explain the source of, or the assessee explains the source of, and the assessing officer is not satisfied, then the cash credit will be treated as unexplained income, taxable at the rate of plus 25 plus, got the English? Where the assessing officer requests for explanation of, and the assessee does not explain the source of, or the source of is explained but not, the assessing officer will treat the as is the chapter. Yes, people, you and I are skipping this chapter. We are only reading the first line. The first line gives the answer. Where the assessing officer deducts dash, whatever it is, cash credit, unexplained investment, unexplained expenditure, whatever you call it. Either he deducts this and you don't explain him the source of this, or if you're explaining the source, he is not satisfied, you treat that item as unexplained income. That's what the chapter is all about. We have discussed this in inter. There is nothing great about it. At CA final also, nothing great is going to be asked except for the amendment of current year. Yes, that is what we'll discuss in tomorrow's class. Not an important thing. But right now, the items are very simple. First is cash credit. Matlab, you have money in your bank account. Officer is asking source. Second is called investment. You have some assets with you, which you have never recorded. Officer is asking source. Officer is asking source. Third, you have unexplained. Sorry, investment is cash. Investment is cash. You have cash in your hand, which you have never disclosed. Read the first line and second line differently. First line says cash is there in the bank account. Second line says cash is not disclosed itself. This is basically part of raid. This is basically part of raid. Third is asset. I'm talking about jewelry stuffs, valuable articles, all jewelry, buildings and everything, which you have not explained. Fourth is called expenses. Example. You have gone for a very huge foreign trip. You have got your daughter married for 5 crores, but your salary gave it 20 lakhs rupees. Your overall lifetime money would have been 20 lakhs, but daughter wedding ki you spent 5 crores. Where is the money coming from? Yes, so he may ask you for the reason of the source. If you are able to justify saying, sir, I took a loan and everything, fine. But if you say, no, sir, you understand. In that case, he'll say, boss, I never understood 39. That is what the answer is. Yes, last is called amount borrowed or repaid through negotiable instruments or huh? What? The Tirupati, you and the big white color thing will be there, no? That time shape thing. You go there, you put some crore rupees inside it, and you say Govinda. Yes or no? Is that what I'm talking about? No, huh? What is hundi? People see enter syllabus, come on. My students are not telling me this, very insulting. Jitesh. If I give you the example, you remember. Shall I? You remember the example of Shivaji the boss? Now you remember. Now you remember. For everyone else, you have a homework. For everyone else, you have a homework. You have to figure out what is hundi and come for tomorrow's class. Yes, this is not the Tirupati hundi, people, so be careful. Yes, you will go back, you will research and come back and tell me what do you mean by hundi. I will explain it in tomorrow's class. We complete unexplained income with that, leaving me with only one chapter, which is agricultural income. Yes, any doubts till this year? Are we all feeling comfortable enough? Yes, perfect. Thank you everyone. Have a good day.